We're live. 2:30 Central. Earnings,
Ooh.
y'all. Yashu with me. The crowd's going to get a lot bigger. Don't you worry. Come on in. Make yourself comfortable. Big day today, January 25th, 2:30 Central, 3:30 Eastern, 1:30
sir.
Pacific. What other times? No.
12:30 Pacific. There you go.
Thank
there
you.
you go.
Look at
Yeah,
that.
you can't forget.
Yash, how you doing, brother? How you doing?
I'm doing great. Yeah. How are you doing? It's a big day, huh?
Good, man. Big day. A lot of people are looking forward to this report. We're going to have a lot of people on with us. We have Yashu right now. We're going to have Nico from not Hit That Bit. You're from Hit That Bit, Yash. From Investing Against the Grain, joining us here any minute. We'll have Alexandra Mertz as well joining us. We're going to have Matt Smith joining us a little bit later. We're going to have Ross Gerber joining us around probably half an hour after market closes, because he's doing his calls and all that stuff, because he's out there fighting the FUD, as he said. Ross Gerber is. We may also have Gary Black on at some point. I know he has got a very busy schedule, but he might join us later, as well as Emmett Peppers. He might join us, and then one or two special guests that I'm keeping secret. Shh, don't tell anyone.
Elon, star-studded event.
Yeah, for sure.
It's I was saying, and by the way, I see everyone in the chat here on both chats. I actually have all the chats pulled up here, so I see everyone, all the mods, all the members. Shout out to you guys. Let us know where you guys are tuning in from, city, state, country, whatever you guys feel comfortable sharing. Throw it in. I'm watching everything. But I was just saying in our Discord this morning, I was saying this. I'm not sure, and you can debate me on this if you think I'm wrong here, but it feels like this earnings call is probably the least hyped call, I would say, in the last little bit here.
Really?
And I get it. Dan Ives came out and said, like, this is the most monumental moment in Tesla's history ever, which I found a little bit hyperbolic. But it's, I don't know. At least it is. At least I feel like it's more so like everyone's looking forward to Q1 print when they can see the actual margins from all these discounts and how is demand. It seems like Q4, everyone just kind of got behind them already. Maybe you guys disagree.
I don't know. I do feel like there's a lot of hype behind this one, man. I feel like this is the first earnings report since Elon bought Twitter, and since he went on that little tweet skipade of getting everybody pissed at him. And I think we're at the point now where this is the first time we're going to hear from him in like a formal setting, in like a Tesla setting, and then everybody's going to get to ask him all the questions about all the stuff that went wrong or perceived as has gone wrong in the last few weeks. So I think
maybe I feel like that because we did because Elon did that Twitter space not too long ago with him talking about everything. How's it going, Nico?
What's up?
Maybe I feel like that because Elon did that Twitter space where he talked about demand shrinking and
center.
All good. We're good. with demand shrinking and everyone not worrying and all this stuff, it just feels like maybe at least I feel like I kind of already heard what I needed to hear for Q4. Now it's about a big question about Q1 and kind of where margins sit here now.
Okay. Nico, how are you feeling for this thing? By the way, we're multicasting this on multiple channels. We are on this channel. We are on that channel. Anyway, all three of us are multicasting to our channels, and then there's another one as well with Ross's channel as well. So if you're tuning in from Gerber Kawasaki, welcome in, everybody. We're multicasting this over multiple channels, and we'll see if YouTube takes us down. They didn't do that last time because you guys are multiplying streams. We'll see. Anyway. Apparently not. I don't know, but who knows? But yeah, just change the thumbnail up. We're good.
Fair enough.
Nico, what are you looking forward for this earnings? Do you think it's hyped? Do you think we're going to be disappointed? Do you think it's going to be that special? What's going to happen here, bro? We have the crystal ball, so you have to tell us what's going to happen here.
Yeah. So I wish I had a crystal ball. I don't know. I feel like it's hyped. I feel like it's not hyped. I don't know. Part of me wants it to like soar to the moon. Part of me wants it to tank. I kind of want a little bit of everything. And just for context, I just have some cash on the side that I've been just saving for a rainy day to either buy more Tesla or to potentially buy a house if this one area would just go down a little more. And now I'm like, whatever, I'll just put it all on the Tesla if we tank. So I'm just mixed bag of emotions. But I definitely think I think it's a tense one, especially after Microsoft earnings yesterday. I mean, I feel like Microsoft is kind of a bellwether for the economy and what's happening with companies. Hey, Alexandra.
How are you?
Good.
Hi, Yashu. Hi, Farzad.
Hello.
Hi, guys.
Well, thank you for joining us. Yeah.
There she is.
We were just talking
Playing the
about
mama.
yeah. We got the mama in the house. We were just talking about how we're feeling about this earnings report. The Yashu said it's not a big deal. He's not hyped for it at all. No one cares. Nico's like, there's some crazy stuff might happen. He wants to go down to 0 because he wants to buy more stock.
Didn't he want to buy a house? Didn't he want to buy a house?
Yeah. Well, I'm so conflicted. It's a crazy. Real estate's still crazy expensive, I think. But yeah,
true, right? And so stuck. The market is so stuck.
It's
Nothing's
stuck.
happening.
Exactly. Yeah, and like where I want to buy, it's like I want to buy to tear down to build, and it's like I'm not gonna pay this much just to tear it down. Like it's ridiculous. So I'm just like, come on, all these interest rates are up. Go lower.
I know, and it's why it is stuck, obviously, right? Because the current sellers have mortgages at 3%. They are in no hurry to sell because they have to do something afterwards with their money and find another place. So they don't want to go lower. The buyers with the 6 or 7% mortgage rate don't want to buy. So everybody's just sitting there sclerosed, and that's and they can do with interest rates what they want until they really lower them. That's not gonna unfreeze. It's just I hate it. I just absolutely hate it.
And the market is saying that rates are going to drop. So why would you rush to buy now?
Exactly.
You just wait.
I mean, nobody's going to. And I feel for those mortgage brokers. I mean, my gosh, they must have gone from the year of their century, right?
Yeah.
To nothing. Like if you did buy that plan on the credit, you're going to feel it.
Oh, man. I have. Oh, go ahead, Nick.
Go ahead. No, you go.
I was in Canada. I'm not sure if you guys know this. So we don't really lock in rates for 30 years. It's not really a thing up here because there's some legislation that doesn't allow us to prepay, not pay a penalty like you guys can down there. So I have a mortgage renewal coming up this month, actually in the next 30 days here. I originally got that place in 2017. Rates were, I thought I got screwed at 3.44, and we were sitting at sub 2, right? We were sitting at sub 2 for so long. I was like, I screwed up. And now the rates are at like close to 6%. I have to refi on this. So we have a 5-year term typically. You can go variable as well. So it sucks. Like I have the worst possible timing ever for this place. But it is what it is. Like I think I'm going to go variable. The Bank of Canada, I want to interrupt and just say that the Bank of Canada pretty much said that they're done raising rates now.
Sorry, somebody's got a lot of feedback in their background. Somebody's like,
it's me. I got a delivery FedEx. So let me cut the mic.
Actually, I was gonna. If you're talking, it's actually no feedback. What are you expecting? What are you expecting out of this earnings report? What are you looking for?
I mean, I didn't hear what Nick and Yashu said, but I really hope it's absolutely boring, right? Because we've got so much coming. We've got the 1st of March, and I want them to concentrate on products and the vision then. We've got another one already coming in 3 months. And then a month later, we have the shareholder meeting. So I just hope, I mean, you all know, I wish Elon wouldn't be there. I'm sure he's going to be there. I hope he doesn't talk about Twitter. I just hope they're doing some of the easier questions. Herbert just walked me through the top say questions now. And I mean, they're all rather boring, I find. I don't even understand why they got so many votes, but that's just me personally. And so if it's that, Zach could have done it all by himself. There's and anything on products, they should just deflect on 1st of March and not get into. Is my one of the reasons why I came on early, is my mic now synced? Because with Herbert earlier,
perfect.
It wasn't good.
This is probably one of your best setups you've had.
Oh,
yeah.
My gosh, thank you.
Yeah.
Look
at you.
Talking about my
incredible.
hair. Talking about
Yes. I'm talking about the look, just everything, the sound, the internet. Incredible. There we go. Incredible work.
The vibe.
Yeah. So, but you said you want it to be boring, but do you think it will be boring? Like, do you actually think, given all this stuff? Because here's my theory, right? I was telling these guys before you came on. Right. This is the first time we're going to be able to directly interact in some way with Elon for an extended period of time in a formal Tesla setting outside of the spaces after he bought Twitter. After, he said all those things on Twitter, after all the craziness that has happened with the stock, after all the noise around China and pricing and gross margins. I feel like this is the first time we're actually going to potentially hear. Go ahead.
You do know there's obviously a couple of weeks prior to the earnings where they have to be quiet. Didn't you feel that was like sort of like relaxing? We've had enough before that. So I just feel like there's really no need to fire it up again. And my hope, but then again, I mean, I'm older and just I like it a little bit more settled. The problem, it's not a problem, but the issue is that you can actually talk a recession to happen. There is a self-fulfilling prophecy, and especially with people that have such a voice like Elon, right? I still don't see, a huge recession happening. I know we see tech people being laid off. I know the car sector is going to have problems, but that's not because there's a recession. I mean, we all know that they have problems they have to, and it would obviously be horrible to do it in a recession year, but they have problems coming anyway. But I just hope he doesn't talk too much about the recession, because it just brings the whole mood down. So lots of it depends on his personal mood today, right? How talkative he's going to be, how fired up he is about new products, how much all these law cases and everything, the lawyers tell him to shut up a maximum. So this can go anywhere. This can go absolutely anywhere, from over euphoric, which he was in October, which I thought was too much. And you probably all remember that I said, then please don't come. And he came, and there we were, to something like, oh my God, doom and gloom. This is a recession. This is horrible. We have to cut prices. Anything's possible. And that's why actually, I wish it would just be numbers, boring, and that's it. Get this over with. Have the stock price stabilize at these levels, and then go full blast into products and innovation in 6 weeks or 5 weeks it is now.
Okay. But don't you think during the Twitter space we got a couple of weeks ago that we got like an earnings call light, didn't we, from Elon?
Yeah,
like it already feels like, to me, this is why I was saying it was kind of not so hyped up for me, because I kind of get the general sentiment like Elon's going to say today. I mean, I could probably put it on a bingo card. He's going to say this year might be the worst recession we've had since 2008, or since the dot-com bubble. It's going to be ugly. Housing's going to suck. We need to have a war chest. We're not going to do buybacks until we're comfortable with the recession talk 6 months later, probably. Like it feels like we're probably just going to hear the same things that we heard in the Twitter space. I'm not sure if you agree with that, though.
Well, let me put the buyback in perspective. The buyback actually came on the plate for last year's for October for the last earnings call, right? And he then said, "Well, I'm all for it, but the board has to decide, and they have to meet and they have to decide," right? So I don't think they will announce it today, because they announced in the meantime that on the 1st of March they will also address capital allocation. So I think buyback, it's not even we don't do it or we don't do it for this reason. It will just be deflecting it to March 1st. Product will be just deflecting to March 1st. So the big question really is, are you still guiding 50%? Is that overall guidance, or is that a precise guidance for 2023? And please, let it not be a precise guidance. Mm-hmm. And that's just it. And then the second is, do you see an immediate impact on these price cuts? What is currently happening, which addresses a very specific moment in time, which addresses now. And I just feel that's a bit a shame, because it will overlap all the rest, right? If he says anything about, oh, this was necessary because this is a recession or whatever, those journalists are just going to run with it. This is going to be much too negative for what's true.
So what are the chances, you think, on this call that we get some sort of softening guidance from Elon that says, hey, we've lowered the price, we see incredible amounts of demand, we're confident that our gross margins are actually not going to be as bad as a lot of people think, because of our economies of scale and the fact that Berlin and Austin are going to be more ramped, and we're seeing deflation in the pipeline. The suppliers are going to give us more favorable deals because the rest of the auto industry is going down, which gives us, pricing, leverage, because we'll be able to scoop up, right? So, like, what are the chances that we actually get a reversal in tone, which could set off a rally? And I don't want to put like optimism, again, not financial advice. I'm just sort of throwing a question out there. What's the likelihood of that, do you all think?
That's my best case scenario if he's there.
Yeah.
You really don't want him to be there, hey?
I want him all the time. I love listening to him, but I just think this is not the occasion. I just saw a very cute comment from Henning saying, Mr. Tweet and Mr. Beast, right? Isn't that cute?
So do you think that's actually true that Mr. Beast is the new CEO of Twitter?
I don't know. I mean, I wouldn't mind. I have all these people saying, "Oh my God, he's 24. He's just a YouTuber." My gosh, I mean, this guy has seen more than many people I've ever seen, and he's so clever about it. And if there's one guy who understands media, that is it, right? So will he be the one that Gary will like because he can now speak to advertisers? Probably not. No, I'm sorry, I shouldn't make that. I know he's coming. He's gonna pull my ear. He's gonna say, "Alexandra, what did you say?"
Oh my God, he just joined.
There you go. But I mean, you can address the advertisers with a high level, person in your company just addressing advertising. You don't need a CEO that be that person, but he can be the one bringing that YouTube income, and that is huge, right? If he really pulls that YouTube income and understands how YouTubers want to be monetized and how this can all happen on Twitter rather than on YouTube, I think that would be just a genius move. And with Elon in the walls, be it at Neuralink, be it at SpaceX, but even more being at Tesla and at Twitter, any CEO will not be a full-fledged CEO, because who is pulling the strings behind it? It's of course Elon, right? No matter what title you give people. I think these titles in Elon's world mean just so much less than anywhere else. And I just want to get quickly my punt out so that I have it, is I'm currently writing an article on the board of directors, just because I was going mad these last 2 or 3 months about, are they really missing in action? Do we have a board that's as good as this company deserves and whatever? So I did a deep dive on every single one of those 8 and wrote a lengthy article. I'm very sorry for all of your time having to spend to read this, but short answer is, we have some absolutely brilliant people out there that evidently, because I found some old stuff, in the good old days could even talk about Tesla. But then came the moment, I think 2016, 17, where the rules changed and Elon decided none of you are communicating on Tesla outside of here except if there's special permission. And that's the moment where you never heard Aaron Price anymore. That's the moment when lots of them just didn't become vocal anymore about Tesla, which I think was the right strategy. That brings me back to communication and Elon. It's just, Tesla is Elon-centric. Twitter will be Elon-centric. There you go. It's not published yet, but it's going to come out in the next 2 or 3 days. You'll hear first about it. Thank you for plugging my Substack. And so where I want to get there is Mr. Beast in Twitter. There will still be Elon at Twitter, right? He won't deflect everything, but he will bring a certain crowd in the millions to Twitter that will stay on Twitter because the content will be on Twitter. And I think that'll be a great thing. Sorry, long answer for a short question.
No, it's great insight. Nico, you were going to say something before.
Oh, nothing to do with Twitter. But I will say I kind of don't like Mr. Beast to be CEO. I think he'd be good like a CPO, but someone just come up with ideas. I'm biased. I like the idea of an engineer being CEO. Or even Elon staying CEO, but he doesn't run.
There they go again. Oh my gosh. Am I with no, Yashi, you're not an engineer. We're staying here on the normal people side.
I'm not smart enough to be an engineer.
Me neither. I'm the idiot of the place. That's how I always say.
Yeah. It's but what I was gonna ask everybody, do you guys have any interesting option plays for this? And I normally wouldn't do this, but like I said, I have like cash on the side. I'm gonna feel stupid if I don't take advantage of this. I was like, you know what? I'll just buy a couple options, 160 calls. Like if it hits, it hits. If it doesn't, whatever.
Weekly?
February 10th or something like that, I think.
Okay.
Which strike?
Sorry,
which strike?
160.
Okay, I got it. 160. Damn. Okay, so those are going for about $4, $450 a contract. Oh, I just shared Cindy, I just shared a link in the private chat if you want to pull that up. I was looking at the options order flow today for Tesla heading into earnings, and this chart, I know it looks kind of like a mess, but the net is there's bullish option flow heading into earnings. The green line indicates call buying since it's going up. Puts are pretty much flat-ish. That's the red line, and the stock price is white. So heading into earnings, what's interesting here is we're seeing continual call buying throughout the day happening, which to my recollection is not really the norm for Tesla heading into earnings. It's usually kind of a nothing burger, if not a lot of hedging going on heading into earnings. Now, again, this isn't like a surefire metric, but it's good to see what big money's doing, and it looks like they're betting with by buying calls heading into earnings.
Yeah. I'll tell you what I did again, because I'm just so jaded because I have all this cash and I'm like, I don't want to put the work yet. So what I did was I sold puts at $100, at $80, on down. And essentially I got rid of all those sold puts. I closed those contracts out, or I bought them back. And so I had about 5,000 something I made off of that. And then I just took that and I threw it all into call options. So I was like, I'm kind of protecting myself either way. And this is like the one time I've ever done anything that is working out with options. Normally I just lose my money.
What's going to happen is if it hits, you're going to feel like a freaking gambler, bro.
Yeah. Well,
it's going to
the thing
be
is,
amazing.
If it hits, great. Like, great.
Yeah.
That I don't feel bad about not having deployed my cash, right? Because it's almost equivalent. But if it tanks, whatever, that was fake money that wasn't really mine, and now I can buy because we're going down. So
sounds like you're justifying this too hard, man.
I am.
We actually ran a poll here. Let me read the results a little bit after we started the thing. By the way, stick with us. In about 10 minutes, the market's going to close, and then the earnings result will be released here, probably 5 minutes after market closes. And we're going to do a full coverage of the earnings report slide by slide. And then we'll go all the way through until the earnings call. We're going to listen to the call together. And then if people are still willing, we're going to do a post-call reaction with as many people as we possibly can. And I'll be taking notes through the call as well. So we'll have that available for everybody as a service to those that perhaps they want to read along as well. So we ran a poll. Do you think Tesla will beat Wall Street's target of $1.10 EPS? This is adjusted, by the way. They're going to be pulling out stock-based comp, and they're also going to pull out any one-time impact from FSD revenue recognition. 75% of respondents say yes. 24% say no. As usual, our comment section is filled with Tesla bulls. Shout out Tesla bulls. Poll complete, 614 votes. So pretty good sample size. Do y'all have a prediction on what the EPS will come in at? Do you think we'll be over or under 110? Yashu, Nico, and then actually we'll do Alexandra, then Nico, then Yashu. We'll do ladies first.
Okay, and before I give my number, I just want to tell you I'm going to log off because I'm just very slow in looking at numbers and I want to be just by myself at that moment. But I'll be back as soon as I've done my little calculations because that's my financial analyst going in there, and I just need that little moment.
Us three buffoons will try to figure it out.
Exactly.
You'll come in.
Now come back. No, but just want to excuse myself that I'm a slow lady.
Of course.
I think it's going to come actually considerably above 110. I'm closer to 120, and I don't think anybody expects that. But also don't forget the market, Wall Street was at 130 just 3 weeks ago, right? So don't think that they are completely off it. They lowered them significantly, and I do believe, in these moments where you have a price cut in that period where Q4 ends and the earnings call happens, that price cut impacted them. So when they reduced all those earnings, they actually reduced Q4, but that was already over, right? So I actually think they're projecting backwards, which is stupid, but there you go. So mine is close or even a little bit higher than 120. That depends how much they're going to take out as single issues.
Okay. Nico?
Well, I'm going to say that it's probably going to be like right at 110, 19, 111, something like that. But correct me if I'm wrong. I thought I was watching on Emmett and Matt's stream yesterday, maybe, that they said that FSD wasn't backed out last time. Am I making that up? I don't know. I don't know how this stuff works that well. As far as the recognition that they've done before, that they didn't back it out.
I see what you're saying. Yeah, what Matt is saying is that analysts will back out the one-time impact, but then what's happening also is that they're not recognizing the fact that Tesla's earnings would have been higher in the past few quarters if they were able to recognize the one-time impact. So his point is that it's a double negative. So you don't give them credit for selling FSD, and now when they do recognize FSD, you're like, well, it's a one-time, right? Exactly. So it's almost like you're saying, that $2 billion fake, right, or whatever that money is. Yeah, which makes sense. Honestly, that's a phenomenal point. But you're thinking they're going to be right dead on at 110. You think they're going to come in line with market expectations because you want to buy more stock.
Well, no, I think that would be a nothing burger. I think the stock would probably just chill where it's at.
Yash?
Yeah, I'm gonna say over. What was it? What you set the line at 112? Was it
110?
110.
What? Yeah, I think and just to confirm, non-GAAP. You mean?
Adjusted EPS, backing out stock-based comp and any one time from FSD the firm.
Yeah. Okay. Yeah. So then I'm closer to Alexander, closer to 120.
Okay.
Now I'm not sure if that number is going to drive the sentiment on the stock. Just to be fair, I think it's going to be the automotive gross margin number one, the XF credits, and then personally, I'm really looking for. I know Farzad, you are as well, looking at energy margin to see if there's any changes there. Might be it might be 1 quarter too premature to care about that, but still, it'll be interesting to see if it goes up from I think 11% last quarter.
Yeah, those are great points. I have it at 123. $1.23, not 123 on purpose, but like because literally that was what the math. Yeah,
big boy over here.
and for me, it's I do think the margins will come in better than folks expect. I think there's going to be a lower COGS than folks expect as well. I think COGS will reduce more than pricing would have reduced in Q4 because some of the economies of scale of Berlin and Austin, plus deflation in the pipeline. Plus, I think there's going to be a little bit extra energy in the earnings that's going to help. But I'm with Yash. The things I want to be looking for very closely are auto gross margins because it's going to be so much data for what Q1 implies. I think it's going to be a very, very important metric. And then I'm curious to see revenue first from energy, and then it's margin. If there's like say a 30 or 40% growth quarter over quarter, I think that says that the Lathrop factory is probably pumping out more than we think. And that could be a pretty big boon for the rest of the year. But it's tough to gauge until we see the numbers here in probably like 5 to 7 minutes here. So
I have a question.
We're almost there.
Do you all think that the announcement of Giga Nevada's expansion is a pure coincidence to be in the 24 hours before the earnings call, or does it have anything to do with it?
Are you taking an energy angle here? Like how are you thinking?
Yeah,
this
I
fits in?
think actually that this will influence a lot the question of the analysts, right? They don't have to submit their questions earlier. So it's not like the say questions who have been macerating there for the last 10 days and people voting on them. And I think this is throwing a ball to the analysts to ask these questions. What's happening in Nevada? Didn't you say they were difficult to recruit there or whatever? Because those are easy questions for them to answer, and they can really because this expansion is fabulous, right? There is no doubt they can get into 4680, they can get into the semis. That's gonna help fluff 5 to 10 minutes of talk. And if that was the case, if that was a setup, if the timing, not that obviously the expansion is not a setup, but the release of the news, the timing, I think that'd be great. I think that would have been very clever of them.
I think it's interesting. I think it's interesting that it's a day before earnings for sure. What do you guys think? Do you think?
What's your tinfoil theory on this?
Sounds
like you have one.
It's hard to feel optimistic about energy's impact this year, to be completely honest, because that Lathrop factory coming online and the way they're investing into Giga Nevada is a direct investment into the growth of energy, and it's been something that's just been sitting on the sidelines for so long. Could Q4 22 be the first time we start hearing more language towards like, hey, we're not just a car company, we're also an energy company. Y'all forgot what's going on here. So I don't know, but that's part of me is like, I just want to wait and see. But I do think it's very interesting timing. And we had an onslaught of really positive news here too in the last 48 hours with the German EV tax credit. You got the numbers coming out of California where Model 3 Y were more than every other EV automaker sold in California combined by a factor of like 4 or something insane, or 3. Just completely nuts, insane domination. So okay, all right, so market's closed. It's 3:00.
Boom.
So now it's time to get serious now, y'all. Okay, no more laughing or smiling. I'm kidding.
144.43. We're closed green, hey? So we closed green on the market.
Tesla.
Yeah.
Come on, Yash. Come on, we gotta go to this. All right. So producer wife, let's go ahead and do this. Go ahead and pull up the ir.tesla.com link that I gave you and just hit F5 every few seconds. We're gonna do an F5 party here. And then I'm gonna pull up the stock chart to the right of me just to see how the market reacts. on my screen.
Nice.
And
let's do that.
we're just going to wait for the earnings to drop. So for those that
Okay,
have
doke.
just joined us, thank you so much. Alexander, you're going to join us at some point once it's out, right?
I'll be
gonna
back
do your
15, 20
analysis. Yeah.
minutes. Just give me a little bit of
Yeah.
time. Okay.
So
See you
she's
later.
going to digest. We'll see you in a bit.
I
So
will.
Alexandra's going to go. She's going to go offline. She's going to come back. She's so she's not distracted by our craziness here. So now here, let me send you the link.
And everyone in the chat, throw your guess for non-GAAP EPS or adjusted EPS. Throw it in the chat so we can see if someone nails it before. And you have to do this again before the results come out, which they're not out just yet.
Yashu, when you said 144 earlier,
Yeah.
I was like, oh, it was $1.44.
Oh, that's how bearish you are now.
No, I was like, oh my God.
Oh, you thought earnings.
Yeah.
Oh, okay.
Yeah.
I thought you meant the stock price.
Yeah.
$1.44. You know what though? Matt was saying from Good Soil, and hopefully he joins us here soon. He was saying that, I mean, if FSD deferred revenue gets recognized, like, you know, we're talking like that's a big difference there, 20, 30 cents, whatever it is, $1 billion or whatever, right? Awesome. So many guesses in the chat. What's let's see. By the way, for anyone that's wondering, the Nasdaq finished red, down 22 basis points today. The S&P 500 was flat. So Tesla was really relatively strong today. I mean, okay, no, maybe I should take the really part of that sentence back, but it was relatively strong today, finishing green. You know, Google was down 2.5% today. How did Microsoft fare? Microsoft was down 60
Not bad.
basis points. Yeah. Yeah, you know, I'm really excited for what Microsoft might evolve to. Don't want to change the topic before earnings here, but I'm really excited where Microsoft might go here.
I love what they've been doing here in the last few with their new CEO. Their new CEO has been what's his name?
Satya Nadella.
Dude, he's a beast. He has transformed that company.
Yeah, no one likes Bill Gates, frankly. So. So everyone's pressing refresh on this page. Yeah, I've got Twitter pulled up too, and usually if the wires will pull it up, I'll be able to say it here.
Sorry, babe. Click on quarterly disclosure. You're in the wrong tab on the top there under documents and events. Click on quarterly disclosures. Right below in the middle of the screen where it says quarterly disclosures.
Right under documents and events.
Yeah, you see documents and events in bold to the left. Up. Documents and disclosures up a little bit. There, right there.
You just right there.
Perfect. Yeah, go ahead. Nice.
This is like, you know what's crazy is like, if you follow on FinTwit, it feels like everyone is following Tesla earnings, not just Tesla folk. It feels like every single FinTwit account out there cares about like we're at the point now where the whole entire market cares about what Tesla reports, which is actually kind of cool to see.
Oh,
yeah, it's pretty wild. Pretty wild the type of like community that has opened up. Sorry, Nico, go ahead.
Yeah, this is wild. One of my brokerages, Fidelity, they sent out a memo that if you're gonna have Tesla, if you're buying Tesla, that now your margin requirement will go from 40% to 50%.
Yeah,
I saw
that. That was last week, right?
Yeah.
Mm-hmm.
That's because they perceive higher risk for people that are holding the stock.
Yeah, I don't remember what it said. I mean, I haven't even actually looked at my message of it. I'm assuming I have one in my inbox, but my buddy also uses Fidelity. He sent it to me. I was like, what the hell? I thought it was fake at first. It's like, there's no way.
I mean, I remember back in the day when, what is it, 2018, when there was like ridiculous short interest on the stock. It was like, they were asking a lot from a margin perspective. For those that are just joining us, 3,200 on this channel here. Thank you all very much for joining us. We're just waiting for Tesla's quarterly earnings to drop. It usually comes out about 5 minutes after market close. The stock is up 0.86, 0.95% right now after hours. So we're just waiting patiently to see what kind of numbers Tesla reports. So thank you all very much for joining us.
Absolutely. Hit subscribe no matter what stream you're watching on.
Yeah.
And,
like, subscribe, all the buttons.
I like that we can do this together as a community, not just us up here, but everyone in the chat as well. Because I would I would have already been doing this regardless of if there was a community or not. So I was already going to be, I just love how we can all come together and create kind of a hive mind around everything that goes on.
I agree. So like a bunch of nerds uniting to just be members. It's the wildest thing.
Is there any other company that this stuff happens for like this? Like,
oh, it's out. It's out.
It's out.
Yep.
It
just crashed though. It is out though. It is out.
Oh, I just see it. Okay, click
on it.
Click there you go. Go ahead. Click on download right there. It says download.
It doesn't work though when I click on it.
All right. So we might have to keep trying. Oh yes, temporarily.
I got it. Okay, so automotive gross margin quarter 4 2022 25.9%, of which regulatory credits was 4.6. Let me just do the quick calculation here.
Oh, that's with credits.
That's with credits.
That's with credits. 25.9%.
That's low.
Minus 467 5055 divided by 21307. So 23.7% is what I think the automotive gross margin is ex ZEV credits, without ZEV credits on it. OpEx is a little bit higher than last quarter, but not by much, maybe by 100 million. Operating margin for this quarter is 16%. Adjusted EBITDA is 5.4 billion. Adjusted EBITDA margin is 22.2%. And EPS diluted is $1.07, and non-GAAP is $1.19. So there's that.
Does the 19 include the deferred revenue?
I will check.
Okay. I finally got it up on my end.
You got it? Okay. So EPS $1.19 beats $1.12. A revenue of 24.3 billion beats expectations of 24.1 billion. So $200 million higher than expectations there. We already got that. And let me just look for adjusted FSD.
Can you share your screen, Yash? Do you have it on your end?
Yeah, I'll pull it up. Video.
So while he does that, the stock is just kind of oscillating between positive and negative. So far,
it's kind of
nothing.
Flat.
Yeah. Maybe our servers in Canada are a little bit faster here. Okay. So revenue was up from growth in vehicle deliveries, up with growth in other parts of the business. So we'll talk about energy here in a second. Increase in ASP year over year, excluding the FX impact, the foreign exchange impact, including favorable impact of model and region mix. The negative on revenue was the negative foreign exchange impact, about 1.4 billion. That's big. Quite big. That is, yeah. So profitability was increased with growth in ASP and vehicle deliveries, despite the margin headwind from underutilization of new factories. Gross profit growth in other parts of the business. So I think that relates to energy that we'll look into here in a second. FSD revenue recognition of $324 million in auto sales. Not all of it. Okay. So by the way, and that footnote says this pertains to the wide release of FSD beta in the US and Canada during the period. Additionally, we expect to recognize nearly $1 billion of deferred revenue that this remains for such customers over time as software updates are delivered. Okay. So another Billy coming down there. So lower stock-based comp and payroll expense because last quarter 4 was Elon's big fat package. Higher raw material and commodity. Higher raw material, commodity, logistics, and warranty costs. Cost of production ramp of 4680 cells. Negative FX impact. Deliveries. I think we all
you did
know
that on
this.
purpose, didn't you? You son of a
bitch. I swear to God, I didn't do that on purpose. I apologize. Okay. So Austin, the Model Y production line in Austin produced over 3,000 vehicles in a week towards the end of quarter 4. In quarter 4, we produced enough in-house 4680s in a single week to make over 1,000 battery packs. We know this. Pilot production of Tesla Semi commenced in Q4. You know that.
By the way, Tesla's up over 3% in after hours.
I like that. Berlin, Model Y production in Berlin has produced over 3,000 vehicles in a week towards the end of Q4. We've introduced 2 new multi-layer paint colors from our advanced paint shop at Berlin, Quicksilver and Midnight Cherry Red. So that's FSD. I don't think there's anything new there. Battery powertrain. We can go through this with a fine tooth comb later, but let's talk energy. Energy storage deployments increased 152% year over year in Q4 to 2.5 gigawatt hours for a total deployment of 6.5 gigawatt hours in the year 2022. By far the highest level of deployments we've achieved. Demand for our storage product remains in excess of our ability to supply. We are in the process of ramping production at our dedicated 40 gigawatt hour megapack in Lathrop to address the growing demand. This factory should help further accelerate growth of energy storage deployments.
Okay, so energy margins are substantially higher, by the way.
Are you doing a quick calculation? Do you know what?
Yep.
Do you know what they are?
Yep. 1 second.
By the way, outlook as you do that,
12%.
Okay, so up about 1% from quarter over quarter.
3 basis points. It was at 9% Q3.
It was at 9%. Okay, so 2%. Volume, by the way, outlook. We are planning to grow production as quickly as possible to remain in alignment with our 50% CAGR target we began guiding in early 2021. In some years, we may grow faster. In some years, we may grow slower, depending on a number of factors. For 2023, we expect to remain ahead of our 50% CAGR with around 1.8 million cars for the year. Wow.
So they gave guidance. That's surprising.
That is surprising.
That's surprising.
Wow. Cash, of course, everyone knows they have a lot of cash. Profit. While we continue to execute on innovations to reduce the cost of manufacturing over time, we expect our hardware-related profits to be accompanied by acceleration of software-related profits. That's good. We continue to believe that our operating margin will remain the highest among volume OEMs. Cybertruck remains on track to begin production in Gigataxis later this year. Our next-gen vehicle platform is under development. There you go, Farzad, with additional details to be shared March 1. So I guess you're right.
So they're hyping it up.
Yep.
Yeah. Real quick, can you go up real quick?
Yeah.
Just go back to cash. Down.
Okay. I think I know where it is.
After hours is back to flat.
Yeah. So I just want to highlight that last sentence. Furthermore, we will manage the business such that we maintain a strong balance sheet during the uncertain period. I just think that uncertain period is interesting, especially for the buybacks and all that.
Yeah. Okay. I think this goes to the recession point. 1.8 though, can we just pause and talk about the 1.8 for a second? That's very specific and not really like Tesla to say, like they usually just leave it out there. So I would say that's kind of a sandbag, is it not? 1.8?
Oh, I think sandbag for sure.
Yeah, it has to be, right? Because anytime they give yearly, if they're going to give yearly guidance on a uncertain period, why would you give a guidance that you might miss? Like it's a weird context, right? Like we're going to manage our cash in uncertain time. We're going to try to continue growing 50% year over year. By the way, 1.8 million cars. Okay. Kind of ballsy.
For sure. Thoughts so far?
So I'm digesting. In the comments section, drop your thoughts. Producer wife, if you can pull up some of the highlights, if you don't mind, so we can gauge some of the thoughts from the crowd. Yash, do you mind continue sharing and stuff? Are you okay?
Sure.
No, not talking, even just sharing your stuff. I mean, whatever.
Oh,
I'm just wondering if you don't mind driving the deck. Because I might point you towards a specific page.
Okay. Sounds good.
Yeah, I mean, for me, the margin number 25.9 with additional regulatory credits seems low to me. Although the operating margin was still quite strong. So the way I see it is that the margin came down, let's see. The margin came down 2 points, but the operating margin came down 1 point. So they still have very good operating leverage. But the automotive gross margin for Q4, with 467 million in regulatory credits, which is the second highest they received in this year versus Q1. The Q1 margins could be under 20% potentially. I have to sit down and do the math. But
free cash
the
is
implications
a little bit low.
for Q1. What's free cash lat? Let me see.
Free cash flow non-GAAP is 1.4 billion. It's kind of low. I was thinking it'd be closer to 4 billion.
Well, how much of that is Berlin, Austin, and stuff that they put in?
There is about 1.8 worth of capex here. A lot of sentiment I'm seeing around people excited that they're doubling down on Cybertruck deliveries this year, which shows you how low the bar kind of is for this year.
I would have been shocked if they didn't.
Yeah, exactly. But I mean, it is good.
We're not sure. Yeah,
it's good. So 1.8, 450 a quarter. Is that right? That math? Yeah, 450 a quarter. I mean,
that's easily doable. Easily.
Well, the question is, why only 1.8? Are they just trying to set the bar really low for the year? Do they have concerns with 4680 scale and they wish they could do over 2, but they're just a little bit behind on that? These are the questions that hopefully they address during the earnings call.
Yeah. I mean, do you think 1.8 is low? I mean, 1.8 is 50%, isn't it? Why do you think 1.8 is low?
Well, maybe I'm just looking at it for too bullish. Hold on. Oh, what was fiscal year end 2022 total again? Total deliveries?
Deliveries?
Yes.
134, 131.
Let's just do
let me
1
verify.
3. So 50% over last year would be closer to 2. But you're saying
1.3.
So yeah, so you're saying go back to 2020. So go back to 500K and do 50%. Is that what you're saying?
No. I'm saying go back to 1313 and do 50%. What is that number?
That's closer to 2.
I see what you're saying. You're saying I see. I see. So you're saying that 1.8 is above the 50% for 21, but the 50% on 131 is actually 196. So that's how they're setting. Okay, so that makes sense. Page 26 for Y 1.8. What's in page 26?
Yeah,
I just pulled it up.
There it is.
So basically, an argument that hey, we don't care about year-over-year CAGR or year-over-year growth. It's about the long-term CAGR of the deliveries, for sure. But it is interesting to note. Of course, like I'm not trying to set the bar at over 2 million, but it seems like everyone thought over 2 million was in the bag for this year. You know what? It's kind of good. I guess they're resetting the bar and putting it back to where they can really set up themselves to really have a huge beat on, hopefully.
Yeah. Okay.
So the stock, by the way, up 50 cents after hours. Really not doing much. At least it's not red.
Yeah.
We got our boy.
Compare contrast. If you look at the last earnings report, they had it for Nevada. They had early production for the semi, and now it says in pilot production. That was a little weird.
But that has to do with the new factory announcement, right?
You think so?
Well, the semi, yeah. Wasn't that what the takeaway was with their new factory? That's where the semis are going to be built out.
Yeah, but why would it go from early production to pilot production?
Oh,
it seems like that's going backwards.
What page is that, Nick?
On Q4, it's where you always see like the amount of vehicles that it's.
I see. Okay, hold on.
Page.
What's up, Ross?
9. Hey, how are you?
How's it going?
What are
you?
Hey, Ross.
Yeah, you're in. What are your thoughts?
Well, man, this is way better than I expected. Actually, there wasn't really a big hit to margin from the sort of sale at the end of the quarter. They're breaking every record. What really stood out to me was that free cash flow continues to grow. It was impacted a little bit, but and cash now at Tesla's over 22 billion. It's crazy. And on top of energy storage deployment of up 152%. I think we've been talking about that a lot on streams lately about what the potential is for energy storage, and you're starting to see the growth in that business, and people just don't talk about it, but this is a massive market. So once again, Tesla's executing fine, and I think the big question is how do these price cuts affect margins in Q1? But beyond that, I think Tesla has a phenomenal year in front of them, and it's a very exciting time.
Yeah. When I look at the margins, so I did some rough math. It looks like they had additional reg credits in Q4 of an additional 150 million, and they also had reduced margin on top of that additional reg credits. How do you view that going into Q1? Do you think that sort of paints an uglier picture for margins in 2023 than maybe some folks may have expected? How do you think about that?
I mean, it's hard to predict what they're going to get in reg credits and sort of the jumble of it, but I do consider reg credits as part of their business. So, I don't model it, but it's there every quarter. So I think, Tesla is entering this like new stage of growth right now, kind of like it's so amazing. The similarities 2018, 2019, Elon's in trial for the funding secured right now. And I'm having these flashbacks, and I'm going on CNN tonight to talk about it. And, it's like, it's the same thing, all these distractions that he's created and the Twitter stuff. And in the end, people miss the real story, which is Tesla's on the verge of its next major leg up as a business. And the paradigm will change dramatically as these factories ramp and as the truck business grows. It's an exciting company to own.
Yeah. Yeah. As we
were I own Apple. I own Apple, and it's like, what am I excited about? You know, it's like, oh, the iPad's been updated. Oh, the glasses are postponed again. You know, oh, they take 30% off services. You know, I love Apple, but there's no innovation, you know,
Yeah.
and I own Microsoft and I go, oh, you know, they're buying Activision. Okay, that's great. And then they're investing in OpenAI, which is super smart. But I'm like, who made that? Oh, that was Elon, you know, and it's like, so AI is the next big frontier. And boy, we're at the forefront of that at Tesla as well. So I just think when you look at the big cap tech stocks like Google, where what's the story there? They got nothing. You know, they're just getting broken up by the government. So Tesla's the most attractive big cap tech stock in the world, I think.
Yeah.
And that's my opinion. Yeah.
I agree with you. How do you think about the market response so far? So it seems flat. It's only up 0.25% right
That's
now
great.
after hours. I think that's
Yeah,
a
I mean,
great sign.
that's an A. Yeah, that's an A plus. You know, I don't think stock should move that much after hours personally. Like, you know, you have
Yeah.
all these people pricing a stock every day in the stock market, and these like big moves after hours don't mean much. Microsoft was up $10 after hours yesterday. Now it's down today. You know, it's like it doesn't matter. And so I think you know, Tesla's, I think, a very inexpensive stock relative to its growth rate and its long-term track record. And investors have an opportunity here. It's I mean, if you look at it now, they did over $4 for 2022, and then if you give them, you know, even a 30 or 40 PE, whatever you want to give them, you know, you're looking at around the same price in this price range now. I think the bigger issue is what are they going to earn in 23, and I don't think anybody knows, and everybody's already lowered their expectations substantially. So there's lots of upside to beat for Tesla. So I'm actually happy expectations are so low for Tesla in 23, because if they do like the $5-6 that I still think they might do, you know, and then you put out 30 or 40 on that, you're going to have a great year with Tesla stock. But they got to execute. That's what I'm pushing Elon. He's got to focus. He's got to execute. They never launch a vehicle smoothly. Never. I've done this for too long. So Cybertruck's going to be a bitch, and they better be ready to play ball, you know?
Yeah. The one thing what we're talking about that came up on the earnings report is that it looks like they are reconfirming that Cybertruck is going to be coming out sometime this year. They're not pegging the actual quarter. They're saying, you know, sometime later this year, which Yashu mentioned, what a low bar that we have now that they have to reconfirm that Cybertruck's coming out. We're like, yay, you're doing what you said.
Nobody believes Elon. You know, he said, you know, it's like, oh, it's coming next week. Full self-driving update, 2 weeks. You know, Omar always makes jokes about that. You know, and as I said, I think Elon likes to tell us his goals more than specific, you know, like actualities. But I think Cybertruck should launch this year, and I think they're on track for doing that. And hopefully on March 1st, we'll get a much clearer view of what's going on in Austin.
Yeah. There were two things that we were surprised by, and I give the mic to Nick and Yashu as well.
Hey, is Alexandra jumping on this call? Did we not get?
She's coming up. Yeah, she wanted to step away for 10-15 minutes to digest this and then come back, so we wouldn't distract her, because we're just gonna be up here talking shit.
And
so she's out
Gary
there
today. Is Gary doing networks or something?
Gary might come later, because I think he's out there doing other stuff, but he might join us later this evening.
Yeah.
Two things that came up on the deck. They talked about the compact car, whatever that platform is, being unveiled. Oh, there you go. Just speaking of the lady, she just jumped on. Perfect.
Okay.
What was I going to say? Two things that came up on the deck.
You call, here I am.
Dude, I'm like, you know, we need some beauty on this call. It can't just be
a
bunch of guys.
Damn, that's a shade to Yashu, bro. Damn.
It is.
No offense, guys, but a bunch of dudes talking about Tesla. Well, that's all we do. You know, it's like,
yeah, we need some eye candy on the screen.
Women eye candy. Very intelligent, capable women to ask tough questions. So you know, it's Alexandra's the best.
Yeah, she's awesome.
Thank you.
Man, you forced S&P into like a whole tizzy over the fact they can't upgrade. Yeah, they can't upgrade Tesla for some reason.
Two things I want to pick your brain on too, like the compact car, and then Alexander, we'll throw it over to you. The compact car it seems like they are alluding in the deck that it's going to be unveiled in some respects, some additional details on Investor Day, which I think is super exciting. And then they gave us a solid number for 2023, which was 1.8 million cars. And I don't know when is the last time they gave us like a strict numerical guidance for a year. How do you think about those two things for say the next quarter or two? Do you think that's going to be impactful at all, or do you think there's nothing here to be really said?
Are you asking me?
Yeah, Ross, sorry.
Yeah, I mean, I hope they learn their lesson about under-promising, because I think they could do 2 million cars. So if that's the case, I like that number because I want to see them beat numbers, and you set these expectations, and Wall Street starts like building models around it. So, I think that's a good number for them to have, but I think they'll beat it.
Yeah. Alexandra, what are your thoughts? You stepped away so we wouldn't distract you, and now you've
I was in the
been
middle.
able.
I was in the middle, and then
You
heard
read the
Russ
whole deck,
calling
right?
me, and
Every
I just,
word.
No, I was on page 30. I tell you exactly where I was. I was on page 30 in the middle,
Damn.
where it says
Fast reader.
purchases of investments. I know, I'm sorry, but I just, I'm doing it at my rhythm. And you see that line absolutely exploded. So you see purchases of investments, who was
Page 30?
a little, page 30 in the middle. And I was, going through what in the world could have been that in one quarter, in the last quarter, this number exploded from a little billion to more than 4 billion, because that is what I'm missing in my whole cash calculations and all that. Now, by the way, Yashu, who said we're close to 120 and who is at 119? Yashu and Alexandra, right?
There we go.
We did it. We did.
Yeah.
But you see those 4.368? You see that number? And
could this be bonds?
Yeah,
I
it's
don't
bonds.
know.
It's for sure bonds. That's what I'm doing at my firm for tons of companies. I mean, I can earn 4.5% without taking any risk.
So 4 billion in bonds?
Yes, it's smart. Think about that. They'll
think
make
so.
hundreds of millions of dollars guaranteed. I've been doing this for clients all day.
So maybe for those that are not familiar with this can you explain us why this is a good thing to do? Like what are bonds and why is it beneficial?
Well, Tesla has $22 billion in cash. And let's say if you go back a year or two, it earned nothing, right? I mean, even to the point where he bought Bitcoin because it was like, we can't earn anything on this cash, right? So if the Fed's going to jack up interest rates to some ridiculous high that it is today, companies and investors can get a guaranteed rate that's much higher than inflation will be over the next couple of years. So for a company or an individual with cash, keeping your money in a bank earning nothing makes no sense. So you can go out and buy a laddered treasury portfolio. This is exactly what I do at my firm for a lot of people right now, and earn over 4%. Now yields have been coming down, but we were getting as high as 4.6, 4.7. So if you imagine on $20 billion earning 4% on it without taking any risk, you're talking about hundreds of millions of dollars of free cash flow with no risk. And that's exactly what they're doing. Zach's a very smart guy, and why not do that?
Do we have any indication how much of the Bitcoin is left in there, or do you just, we just think that was unchanged?
It should say under intangible asset, I think it is.
Yeah, I didn't find that. And then the other thing I was still exactly that was one thing I really would like them to see.
Yeah. It says.
Is it on there?
How much is it?
184 down from 218 previous quarter.
Okay.
Digital assets,
So,
page 29.
Because obviously we already had the lowest point at 16,000 or something in Q3, so they didn't have to recognize more, so they probably sold some down. And then if you can go to page 25, I'm sorry, I'm actually doing live what I was thinking I would do in my little corner before I went back up live.
That's okay.
So
it's okay. I'm doing it
so
too.
I'm thinking and talking at the same time, which is always a catastrophe with me. But you see the average selling price for 2022, despite all this noise of second half of December, is up compared to 2021. You see that on the right?
They had higher prices through most of the year. It was only the last 2 weeks.
It was nothing. It was a nothing burger. That's why I say all the time, it was nothing. And
I think the main thing is, what does it look like in Q1 now with, I don't know, maybe they sell 500,000 cars, but what's margins look like now? And that's, I think, the big question.
Exactly. And obviously the revenue, because on 24, the graph, the red line, that is the revenue. That's the revenue number. And I had that higher. I thought that wouldn't go down that much. You see Q4, the red line on the left?
The revenue growth?
Yes.
51%, right? Or something like that?
Exactly.
Yeah. Still really good.
It's still a very good number, no doubt about it.
And I guess then the all the discounting they did in the last couple of quarters, that came out in COGS. Then it didn't come out in SG&A after all.
Exactly.
Yeah, that's good.
Okay.
And I do agree. I think, by the way, I pulled up Elon's old tweet here, if I can. I agree. I think these are probably bonds that they bought because, and I'll pull it up. because I mean, Elon's kind of given us hints of him doing this, right? Like he said, as a bank savings account interest rise, which are guaranteed, and they start to approach stock market returns, which are not guaranteed, people will increasingly move their money out of stocks into cash, thus causing the stocks to drop. I think Elon's pretty much hinted at this with several tweets, actually. So,
yeah, once again, when I'm doing this, like, I can't even tell you how many bonds I've bought in the last 6 months. You know, I think it's a unique opportunity that the Fed is dumb enough to pay people such high interest that we really can't afford as a country, to be honest. And so
it's us taxpayer paying you.
yeah. It's like, you know, the Fed is so backwards, it's like crazy, you know.
Farzad, if you could put up, please, I'm sorry, I'm walking you through my thoughts. Slide 22 in the middle, operating cash flow. And I would like us to compare
Yashu's
page
the one
22.
with the keys, by the way.
Oh, yeah, sorry. Okay, sorry, Yashu.
Okay.
So page 22, page 22, you actually see that operating cash flow for Q4 quite lower, right, compared to Q3. But then when you go in the trailing 12 months, which is the slide above, it is not as alarming, because that was my first... I got stuck on that one. So that is obviously the impact from China. You see it very clearly in the second quarter and then again in the fourth quarter. But then when you see it on the trailing 12 months on page 23, it more or less gets absorbed. I mean, we're obviously not at the peak of Q3 for the operating cash flow and the free cash flow, but we're on a good way again. So that's quite reassuring. Yeah, I like these results. I think they're the most boring good results I wanted.
Exactly.
That's what I was. Exactly. That's what I was gonna say. It seems like that there's like a collective relief that's being sighed by a lot of people, because it wasn't like crazy one way or the other. It was just kind of
we still got to listen to the call. We still got to call
for sure.
Exactly.
Yeah. It's too early, I guess.
The fireworks haven't started yet.
Yeah, I don't want to jinx it. I don't want to jinx it. Yeah.
This is Nico's the appetizer.
Right. Yeah. Exactly. Everybody drink your wine now.
It's like, what do you want out of Tesla? I mean, it's like such a difficult operating environment, especially in China. You know, last year, remember in Q2, we had the shutdown of the factory with COVID stuff. And, you know, like, I thought last year was really hard for companies. So like, if the operating environment, inflation's down and China's going to be back and they'll be buying cars in mass, you know, hopefully they all have COVID like I do. I have COVID right now. I don't know. I feel weird, but
you're looking sound great.
You're looking good, Russ.
I worked out this morning, and I worked out this morning. I'm testing, and it's like coming up, and I was like, "What the hell?" You know. So I hope this is the worst of it. But that said, I'm a little tired. But
yeah, I can imagine. Now I want to throw in energy storage. I want to throw in energy storage. It will be, and you'll be good. And you were going on for 2 years that you didn't catch it, so finally had to catch
I know. I had to go to Vegas and just like hit up every single thing without a mask you could do, you know.
I tell you, you don't have the age for that anymore.
No,
now,
let's
get back to energy storage. Let's get back to energy storage. You see what their comment on page 11 on the top? So they did 2.5 gigawatt hours in the last quarter. You remember they want to get up to 10. So that's obviously not 10 yet, but it is 38% of what they did last year. They did 38% in one quarter, which is 50% more than the average quarter. So I think they're really on a good way, and it starts slowly, by far not as much as people had hoped for, but it starts slowly to show in the numbers. So that is really encouraging. You see,
I mean, if you broke up Tesla and you just like said, okay, it's an energy storage company. Oh, it's a charging company. Oh, it's a EV company. Oh, it's a technology full self-driving company. And you just broke up the parts and tried to figure this out. I mean, each one of those companies is dominant in its own right.
Sure. Yeah, and you see they moved from 4,000 units in 2021 to 6,500 now. So that's an increase of 64%. That's page 8 in the middle.
Yeah, you know, like Twitter Schmitter, like this is a way more exciting business, you know? Like, I don't know what he's doing. Like, Tesla's just got a massive future in front of it. And, you know, boy, it seems a little bit like a sideshow what he's dealing with now.
No, I don't think so.
Go ahead, sorry.
I don't think that energy is boring.
No, not energy. Twitter. You know, it's like buying Twitter. Like, I'm like, what is this? Like, it's a social media company. Why the hell does this have to do with anything? You know, So I think that this company is extremely consequential to our future and executing excellently. And, you know, really it needs, you know, to really step up, and it will be this multi-trillion-dollar company. I have no doubt. It's just, we got to get from A to B, and it's a little bit of a trek.
Yeah. Talking about energy, if you go to slide 28, Farzad, real quick, you can go ahead and
you're hiding there.
Yeah. I like my beard on Yashu better. If we go to the energy generation and storage line, $1.31 billion in revenue. And then if we look at the energy generation and storage under cost of revenues, 1151, which is about 12% margin. So this is why I think I was hoping the number would be bigger, but again, this is just quarter over quarter, is not a big deal. They're going towards the right direction. But what I gather from this data set is that their margins went up with a ramping factory in Lathrop. I think that's a big deal. So they went up 300 basis points with a brand new factory that's probably going to be not fully ramped. They have a lot of fixed labor hasn't maximized their production line yet. So they had an increase in sales, but they also had an increase in margins. So do we know what the total? Do we know what the total capacity is out of Lathrop?
40.
What's the number?
10 gigawatt hours per quarter. So it's 40 per year.
Okay.
Yes.
Okay.
So there should be a 4xing in quarterly revenue from energy, right?
On
Is
revenue?
That a fair way of thinking about it?
But you have to be careful with the Lathrop numbers, because the prices they currently can get into the numbers are not the prices you see. So this is not yet the sales at 2 million per megapack, because that happened only lately while they're having a lot of backlog. So they're still working on orders that were placed at a lower price.
To be more than 4x.
Exactly.
Yeah.
To be more than 4x.
It's also not clear if they're able to recognize all the revenue as soon as they sell it. So
yeah.
Got it.
Yeah.
I would like to go. I'm sorry that I'm pushing you around again, and I know I've seen the comments yelling at me in the back. I will try to be discreet. So page six, the financial summary. So you always see some pluses and some minuses in those lists. So let's address the minuses. In the revenue, the foreign exchange had an impact of a negative 1.4 billion. Okay, that's a lot of money. So that is Chinese yen, one, and maybe euro, because euro strengthened. I don't even see how that happened, but obviously that must have been over the whole, that's in Q4. Well, anyway, there we are. And you see the Forex impact as well on profitability. There it's then 300 million, the last line of the middle section. And there you also have two other higher raw material, commodity, logistics, and warranty costs. So that is the impact Elon had described in one of the spaces, that there is a lag between when the prices come down and when they're actually, for them, coming down in the production line, just because you have old contracts, you have still stock of raw material and all that. And then the cost of production ramp of the 4680, which was higher, I don't think it's only the cost, it's also the delay. I guess they just had hoped to be able to use these earlier and not just have to spend money on production so much, right?
Yeah.
I'm surprised by that 1.4 number, though.
Yeah, so, that's a lot, right?
Yep, it's heavy for sure.
Because I thought it would have been the other way with like the dollar strengthening. Wouldn't there be a positive Forex impact, right?
No, the dollar strengthening.
It strengthened in the middle of the quarter, though. So you had it negative and then positive. But I think the dollar has been strengthening this year, so it should have a positive impact. I mean, not the dollar, the foreign currencies are stronger this year, so that might have a positive impact for many companies going into Q1.
I look at the little annotation on the bottom. I mean, I'm sorry, I need to put better glasses on, but impact is calculated on a constant currency basis. Actuals are compared against current results converted into US dollars using average exchange rates from Q4 21. So they actually compare it to the fourth quarter the year before. So this is not comparing Q3 and Q4. This is comparing Q4 21 to Q4 2022. That's interesting.
Yeah. The dollar got really strong. So I mean,
exactly.
I mean, the I guess the good news here is like, who cares? Like this will, impacts all businesses internationally that operate, that are globalized in the supply chain. It's not material. I mean, of course, 1.4 billion in and of itself is material, but it's not pertinent to Tesla specifically.
Yeah, it's an accounting thing anyways. Like, you know, they earn the money and then they have to convert it in dollars, but they keep it in China, let's say, anyways, or Europe for those operations. So it's, you know, it is real if you're doing it in dollars, but from a corporate perspective, you know, it is what it is.
I am kind of interested to hear you guys' thoughts on FSD revenue recognition. Only 324. I was kind of hoping it would be higher than that. Maybe I had my rose-colored glasses on a little bit, but it's only 324. So there's 75% more features left to kind of go until that 1 billion is kind of recognized. Then
that's what I say. Additionally, we expect to recognize nearly 1 billion of deferred revenues that remains for such customers over time as software updates are delivered. So there's still 1 billion sitting there.
Yeah.
Wow.
I mean, I think the positive side of that, you know, and this is my eternal optimist saying that, hey, like we have confidence that this is going to be finished, and we're not ready to call it. You know, we're not ready to recognize and say, yep, this is what you're going to get. You know, we pushed out everything. You know, the FSC to every single U.S. and Canada customer. There was, I think, slide 10. If you go to slide 10 on the autopilot and full self-driving blurb at the top, Yash. So they have it out to approximately 400,000 people. Which I think is a good number, because I think the last number we had was what, 250, I think it was, and now it's
I thought it was higher, but it's
Maybe
definitely a bigger number. I thought it was like 3 something, but it's definitely grown.
Yeah.
This really isn't up to Tesla though, Farzad. Like what happens here? This is up to the accountants and the CPAs that do all the accounting to decide.
That's fair.
Right? And they already
the product isn't complete. The product isn't complete, so you know, it is there.
Yeah. There was one thing Ross said that I want to riff from. So if we go to slide 7, and you look at the total production for Q4, 439, which we knew about already. So if you times that, so if Tesla were to do the fourth quarter production 4 times in 2023, that's 1.758 million cars in 2023. To hit 1.8, all they had to do was improve production rate by 3%. So I kind of like where Ross's head is at with, like, right?
That's by design.
Yeah.
I've spent so many times sending them emails about lowering expectations. It's like they shoot themselves in the foot by telling people what they think they can do. And so I think it's real prudent. I think they could do 500,000 cars in Q1. So clearly that number is low. And so, you know, I actually am happy about that. Gordon can have his moment on TV saying, they're not growing, see, you know.
Who?
But then they're going to beat. GLG, you know, we had him on Twitter Spaces this morning again, you know, the forever angry and upset Gordon that technology and EVs are taking over the world and his oil buddies are paying him a lot of money for nothing. But that said, Tesla has the horrible job of managing expectations. So the better they get at it, the better it is for all of us. And so I'm happy with that number. I see how they get to 2 million vehicles, and hopefully that's what they'll hit.
Agree.
It's definitely set up for them to do that.
Yeah.
What else?
They made 450,000 last quarter. Like, it's not getting harder to make cars; it's getting easier, right? So, like, if you just extrapolate out next year, you know, I don't think Austin's only going to do 250,000 cars throughout the whole year, you know, so they're up to that now. So production will continue to ramp, and you know, you start doing the math and you say, oh, you know, I like the low expectations.
Do we think all the bad news is now baked into the story with this earnings report being out? Or do you think Q1 could still be a little bit curve on the road? Like, and I don't want to say
Q1
smooth
is
sailing
always
from
a
here.
disaster for Tesla, guys. You know, Q1 is like always just a tough quarter for Tesla. It just always has been. They throw all, you know, the baby out with the bathwater usually in Q1. So, you know, I don't know how this all looks with the math, with the price cuts and the volume increase and such. But, you know, I think Q1 is going to be messy, and we'll hear more about it hopefully in the call. But I think as a long-term investor, I'm just looking at 23 and it looks like a great year. So I'm not too worried about, you know, this quarter.
I just think with this report that seems to be received sort of, you know, like, okay, like nothing crazy. Like so far, again, this is a preamble to what's going to be potential fireworks in about 45 minutes here. Tip for Boober Mama only, no Farsi. Thank you, no problem. That's for her, a glass of wine when I see her.
We got $10. Where do you get a glass of wine for $10 in Mendocino? You know, no way.
We'll get her some box wine.
Thank you.
Yeah. Thank you very much for that super chat. I just feel like with it might be too early now to call it, but you got the investor day coming up March 1st. And then it seems like we were talking about this before you came on, Ross. Like in the letter itself, if we go once again to what was the page where they were saying uncertain times, Yash, what the hell was that page? It was a Outlook page, I think it was.
Uncertain times.
If you go to Outlook,
it's
Outlook under cash, page.
They say
12.
it a few times. Yeah, they say a few times throughout the whole report.
If you go to page 12.
12. Okay.
Yeah.
Outlook. Yeah.
We have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during this uncertain period. And the one thing that we were discussing was like you have that verbiage, but at the same time you're given like a hard guidance of 1.8 million cars, which implies
we just got an 8F. We just got an 8F filing at 8K filing, and I think it's for a credit agreement for $5 billion. Let me just continue. I'll read it.
Yeah, and so. I
mean, that's probably for the factory. That's probably for the factory.
They definitely have enough cash. Like the uncertain period part that you're talking about is, again, Elon saying, don't get too excited about buybacks just yet. We want to make sure that we're good this year, maybe halfway through the year. It's going to happen though, but yeah, exactly.
Listen, the Fed has a long-term history of overdoing it and causing a recession. I mean, it's 75% of the time. And this Fed is as dumb as all the Fed people I've ever seen. So I think it's very.
You're not shy about that on Twitter either.
No, I am so frustrated, with the fact that we have gone through so much as a nation with COVID and the economy and such, and to see people who had just gotten their feet back and working again now losing their jobs, real estate going down, all the things that the Fed's manufacturing, inflation is gone. There's no more inflation, and so the Fed's done its job, and so these next hikes are really just like about saving face. The stock market, the bond market tells the Fed what to do. It's been telling the Fed what to do for 2 years, and the 2-year Treasury is 4.25, where exactly where the Fed is, and that's where they should be, instead of creating an even bigger inversion of the yield curve. So businesses have to be prudent when you have a runaway Fed, and hopefully somebody's going to check Powell and say, you've done enough. Bank of Canada said that today. We've done enough. Bank of Japan, same. We've done enough. It's much better to err on the side of growth than the side of recession. It just doesn't make any sense. And a little inflation never killed anybody. Okay, so it's like this whole idea that we have to have this more-bound economy with no inflation and no growth is really, really narrow-minded thinking. And so I think that for Tesla and what we see from our clients in the economy is actually still a very strong underlying economy. We still see it, but it's like costs have gone down. If the Fed stops here, we've got actually a really good potential environment moving forward. And then Tesla might actually be in a much better position by the middle of the year than anybody suspects. But I don't trust the Fed being prudent here.
Well, they pretty much said that they would rather put us into a recession than not. I mean, they pretty much said that flat out. So
they want it. Look, I'm just going to be straight with people. They are the biggest cause of wealth inequality in America, and there's no better way to get employees, especially lower end employees, get them fired, stop wage growth. That's exactly why they are raising rates, is really because the average American is starting to do too well, and they call that inflation, but that's actually wage growth. And the inflation that we saw was because of energy and because of the war and all these factors and printing tons of money that they also did. And so it's like, it seems weird to like force people out of jobs, make homes unaffordable as a way to deal with the high price of gasoline. And, gasoline prices are back down. And so the Fed should be done. But, I just don't think the academics who run the Fed really talk to like average Americans on a daily basis like I do.
Okay, let me address this quickly. So yes, it is a $5 billion unsecured revolving credit pact. It can be stacked up to $7 billion. Now you may ask yourself, why would somebody who has $22 billion in the in the charters wants to have another 5 to 7. My best guess, and I mean, come on, jump on me all, is it's for buyback. It is to give them the possibility, if they do a buyback, to not touch the rest of the money that is allocated to gigafactories or whatever. It is currently unused. It's in 3 currencies usable at variable rate. So it can be in dollar or in pound sterling or in euros. And it has a very, very, very tiny margin, which shows that actually, I've always said that Tesla has today in the credit swap industry already a AAA rating, despite of what these 2 stupid credit agencies are doing. So they only have to pay 0.10%, so 10 basis point over the standard range to pull it. They are not pulling it now. It is a credit facility. They can pull it at any day. They can stack it up from 5 to 7 billion. So that may be the first door to the buybacks.
Can I ask you a question?
Yeah, I think it's more for the factories personally.
They have so much money, Russ.
I guess
that's true. Why wouldn't they use that for buybacks?
Why would they take out credit to buy back? Yeah, like what would they?
Because that's an arbitrage.
Too high.
But no. I mean, you don't think that the stock is gonna not go up 5%? It's much easier to opportunistically.
You got to look at it from an earnings yield perspective. You're talking about a stock that trades at 30 or 40 times earnings, so its earnings yield is more like 2 to 3%. So if they borrow at 7 to 10%, I don't know what their rate is, but that's just a loser.
It's variable rate plus 0.1, so it's 5% or whatever. That's not the way to look at it. But go ahead.
But I'm just saying it's like it would be a negative arbitrage, assuming the stock would just go up because of buybacks. That I think is a false assumption. Many of the buybacks that most companies do are actually at higher prices than the stocks end up at. So, it's a little bit of a risk buying back your stock.
Also, this is an open line of credit, right? So if they don't use it, then it's nothing burger. Yeah. So I think that's right. Like
maybe it's like a recession thing.
It's just a war chest without having to look at your cash pile, and that's the only thing you got because Tesla really doesn't have
having a credit card you don't use. And we advise people to do this all the time. It's like you should have several credit cards that you just don't use that have credit. And there's a lot of wisdom to that. Now, also, it helps your credit score, actually, to have open credit that you don't use.
Exactly.
So I think it's a prudent move. And once again, this also could portend to maybe some more gigafactory announcements, and they just want to make sure they have the credit and cash to rapidly expand. So that could be part of it, too.
Yep. All of it, for sure. Yeah.
Is that... Sorry, could I ask a quick question? This is maybe my small finance brain. Page 4. If we go under the operating margin, and I guess down to like the net income, if that foreign exchange impact of 1.4 billion, do we assume that's not going to happen in Q1? Is that how we're thinking about that?
Yes.
So far,
yeah.
Would that would that be an additional 1.4 that should be now in Q1 that wasn't in Q4? Is that a good way of thinking about it?
No, that's a full year. No, that was the full year impact. And so if you want to do just a quarter impact, it was
the 1.4 was full year. Okay, got it. I got it.
But I think the important thing is something that's been a headwind to earnings and such, it will not be there anymore.
It's turning.
Gotcha.
Exactly.
Yeah.
Has turned.
And would that fall? That would fall directly
for
to
a lot
the
of
bottom
companies,
line.
actually, for a lot.
Yes, bottom line only.
Bottom line only, right? So it'd just be like an additional 1.4.
It's after operating. Yeah, exactly. Okay. Yeah, I'm quite happy with the 1.8 guidance personally. This might take it might be a 2 or 3 day long news cycle with Tesla lowering expectations and all this stuff. But after this is over, the year is kind of like execution is set on the stage for Tesla here, because 1.8, if you ask any Tesla bull, they'll be like, oh yeah, Tesla should definitely hit the over on that this year.
Oh, for sure.
Right.
For sure.
And if you're telling that to the street, they're going to listen to you. They have to. Right. So, I think that's great. 1.8. It might suck for a year.
I mean, once again, I've been hoping they'd do this for a long time, which is set expectations low and things they can beat, so that all these people like Gordon don't have the field days that they have on Elon every time something is missed. And I think that's the biggest ammunition the Bears have, is that, oh, he lies. you know. And I've been fighting these bears all week last week, and I listened to everything from Jim Chanos to Gordon to everybody. I listen to everything these guys say because I'm waiting for like a real legit argument, you know. And what I really found is that they don't actually know the product that well at all, and they don't actually. The premise of their basic belief is they don't like Elon and they think he's full of crap. And after all these years of delivering, you'd think they learn, you know. I mean, if anybody you don't want to bet against is Elon Musk. And it's still that same denial that Elon's the innovator of our time. There's no doubt in my mind. He's dedicated his life to building huge, important companies. And Tesla is a masterpiece for fighting climate. And so, I think for most people, the short term, we can fight all day over earnings or cash flow or expenses or price cuts. But when you start thinking about 5 years from now, and I was talking about this because I'm old enough now that 5 years seems like it goes by really, really fast. And I try to like slow down time, because it's like, you have this perception your life's just moving faster and faster the older you get. So for me, when I think about 5 years, it's like, that'll be tomorrow, that's like, it's happening so fast. So like, I don't extrapolate out like, oh, what's 2023? I start thinking about 5 years from now, and nobody can picture what this company will be because it's massive. This is the only way I look at it. It's massive. And so I think for investors, this is a pivot point for Tesla from sort of stage one now into stage two as a company, this $1 trillion company, which it should be or above, really has this great opportunity over the next 5 years. And we know that EVs are going to be mass adopted, and so with solar and other alternative energies. So it's exciting. I think these are a good report, and the more boring it is, the better in a lot of ways.
Real quick, I do want to say that since that announcement came out, it looks like the stock is up 2% in after hours since that credit line announcement. I just want to give you guys a heads up.
Yeah, I have to say I've been doing this with Elon for a long time, and and I think a lot of people have been sort of don't get why I've been critical of him, but I think people have to understand. I've said this to Omar. You have two types of friends. You have friends that just say you're great all the time, and then you have friends who are like trying to help you be better at what you do or whatever. And I support Elon 100%, but I don't think he's a perfect person, and I think that we all can improve from getting advice, and he does listen actually. And many of and then the conversation we had on Spaces, I felt like he listened, and so I think he's very aware of what people want from him, and I think over time we'll look back on these moments and be, it's sort of like we're a part of something that's going to be massive over the next 5 years. Yeah, it's exciting.
The one thing that's very encouraging to me is I agree. I think in the last, call it since the last 4 weeks, ever since his car got attacked almost, remember when that crazy person jumped on his car, there's been a very drastic change. I feel, and I could be 100% wrong, it's like super subjective, but like there's been some sort of tone shift. Plus, the Tesla community has been very vocal. You've been vocal, I think with valid feedback.
Sorry.
Yeah. No, please go ahead.
No, I think he was listening to us like on that Twitter Spaces. Like he jumped in on Twitter Spaces. Like, obviously he's a busy guy. He definitely gave us the time to talk, gave me the time to talk, which I super appreciated. And after that, I tweeted, I felt so much more confident with what was going on. And I was really happy he spent the time to talk to us, and that's the way I feel now. And I do think it was a turning point where I think he's listening. I think the messaging at Tesla has gotten much better. They're listening. They need to define themselves as a brand. And I think also Elon is also realizing, hey, I've got all these businesses and I got to make sure that I treat them all sort of this with love so that, all my fans and people who really believe in him don't get hurt in this process. And many have been temporarily, and hopefully will recover value over the next couple of years. And this will be a blip in the chart,
Yeah, for sure. We're coming up on 4 o'clock Central, 5 o'clock Eastern. The call should start here in about half an hour. Don't go anywhere. We're going to cover the call as well. We'll do a post-call reaction as well. I did leg day today, and I have a standing desk, but I did bring a chair. I brought a chair so I can sit for a little bit. Thank God. My ass is so... I shouldn't say that.
I've got lots of fun killing to do tonight, and my energy level is like kind of weird right now. So I've got, yeah, I know. But I've got CNN and I got CNBC World tonight. And, you know, I think one of the things that's also important is the messaging around the world about Tesla. It's actually amazing how many international fans Tesla has across the world.
True.
And the potential for this brand globally is unlimited. And I think that's another part of the story that we often don't talk about, is all the countries that have never even gotten a Tesla yet. You know, I have friends in Australia, they want Teslas so bad, you know. It's like, when are they coming? My friends in Thailand, when are they coming? And there are some Teslas there. But boy, we're just at the beginning of a massive shift in the way we do things. And that's why I think it's so important for investors to really focus on the long term, to dollar cost average, invest in, you know, stocks, but also in a diversified portfolios and things like that. You know, lots of good fund managers like me and Gary that, you know, want to own Tesla, but also diversify your portfolio. And then you have, you know, a real opportunity to see the upside of growth of what I consider one of the greatest technological booms we're about to see between AI and full self-driving and electric vehicles and this convergence. Wow, you know, so it's an exciting time, but this is the technology that's really going to shape our next decade.
Yeah.
And I think investors should be very aware of this.
Couldn't agree with you more, for sure. Nico, you were going to say something earlier.
So thank you guys for having me, by the way.
Oh, yeah.
Thank you all for having me. And
yeah, Ross, thank you for making the time.
Even, I hope you feel better soon.
Yeah, I hope you feel better.
I don't feel that bad. You know, my partner's sick. My business partner's sick. I really just hope my family doesn't get sick. They were all sick. Like, I came home, they all had colds. You know,
but you do understand, Ross. You jinxed it, right? Last week on your shareholder call, you were like, 2 years. I don't get it. Everybody gets it.
For 2 years. You know, listen.
Just do 50 push-ups, Ross. 50 push-ups, bro.
I literally was diving in the COVID pool this weekend. So, you know, honestly, you know, I was due. So, nevertheless, thank you for your concern, and hopefully this is the worst of it. I'm just a little tired.
You'll be fine.
Yeah,
you're a young, strong man. You'll be fine.
Well, yeah, I'm a young, strong man. Thank you, Alexandra. That's why I love you so much. Yeah,
I was giving it to you there.
And then I tested positive, and I was like, this can't be right. So I tested again. And I was like, oh, I'm positive again. I got 17 interviews. I got a full day. I don't know. I feel very fortunate right now. So hopefully this is the worst of it.
Okay.
Yeah. No, but we really appreciate you.
I love you all. Hopefully I'll make it.
Love you too, brother.
You know, we love you too, and you're gonna keep us updated. Better. No, don't worry, Edwin. I'm not getting a room with Ross. No way.
Nobody will. I'm all alone now. You know?
No.
Take care, Ross.
All right.
Thanks, brother.
See ya.
Thank
you very much. Bye. Nico, you were saying something. Sorry. Was there something you wanted to say? You were saying something, and then I interrupted you or something. Yeah.
I don't remember anymore, but
okay.
It's
I was just something. Go ahead.
Yeah, sorry. I was like going through the deck and everything, because there's always like little things that change subtly that you pick up on like days later.
Yeah.
But I was just listening to CNBC to see what their perception. Phil LeBeau, like, I can't stand the guy.
What is he saying?
It's just like the spit. I feel like he's a smart guy, and he's been following Tesla for so long, and you would think he would eventually like stop saying things that are just, I don't want to say FUD, because what he says, it's not wrong on the surface, but the way he says it's always like, I'm so skeptical of every single thing to do with Tesla. But like now they're talking about the 1.8 million, and his message is clearly Tesla showing that they're guiding for under 40% growth in 2023. And it's like, that is such a twist on what's actually been forecasted. You know, it's like, it's just listening to this. It's just,
isn't that true though?
It's
factually speaking.
You know, that's what I'm saying. Like, it's true. He's not wrong, but the way he's saying it is as if
it's spending it.
I think it's like I think it's an attempt to be unbiased, but I think it's what ends up happening is that I think this whole thing is a symptom of Tesla set a target a couple of years ago by engineers who are very factually driven. From the time they say a number, that's the number. And then human emotions and how people just perceive things kind of like evolves over time a little bit.
Let me interrupt you here because I'm going to push back hard on that. That's not an attempt to be unbiased. An attempt to be unbiased would be, hey, look, if you look at it from 2022 to 2023, sure, it looks like they're going to be under 40%. But what they've guided since 2020 has been this. And essentially, they're reiterating this. That would be unbiased. That would be factual.
Let me be devil's advocate. Now, I think Tesla did a really poor job at explaining what these 50% meant, plus helped those that interpreted this on a constant 50% flip, right? That every year the basis changed to the most recent basis plus 50%. In the last earnings call in October, when Zach had these just under 50% this and at 50% that, right? So I think that what we really need, and maybe we get it today, is what did this 50% mean? Was that the line from 500,000 to 20 million, a straight line up, and then effectively the 1.8 for 2023 are exactly where we should be, okay? Or are we talking about the 1.3, how much was it, 1.39 of 2022, which now should have 50% more for this year, which obviously is not realistic because that would mean 2.1 million. And then when you hear 1.8, you feel it would be bad. So I'm just taking both sides of it. I think 1.8 is actually good and sandbagging. I think that there's going to be more. But it is really up to Tesla to once and for all qualify how they mean it. You can't wiggle around this all the time saying, okay, this is a long-term goal, and then in the same call say, well, this year 50% is really 50% from last year. Say it, give us once and for all, give the market what you thought it is, then 1.8 is the right number and nobody will be disappointed. But if you leave it this soft space, they will use it. Of course, they will use it all the time.
It's kind of like if you leave something up for interpretation, they're always going to take the opposite side in a way. If they're not like,
and they always will.
Story.
Yeah, but I feel like they've been very specific on this. Like I think they've been very clear on it. They've never said every single year we're going to do 50% compared to the previous year. They've never said that. They've not even remotely. And
Zach did in the October call. Zach's projection for 50% in production and slightly under 50% was really based on last year to this year. It wasn't to 2020 to 2030.
I agree, and I think that was the one big mistake that we've seen, and I feel like he just misspoke. I think it was just a
wouldn't
mistake.
even. Honestly, Nico, I wouldn't even worry about it. Like, it doesn't matter. Yeah. But what matters is that Tesla sets expectations to where they can knock it out of the park. Number one, expectations for EPS this year are already really low, relatively speaking, as a Tesla bull. Yeah. And at the end of the day, execution talks, everything else walks. So it might be a couple of narrative stories for the next couple of days, like I said, but I mean, who cares? If Tesla can't beat the 1.8, they don't deserve our credit for them to beat that 1.8. Show us that you can do it. Get to over 1 million by the middle of the year, and then we're like, hey, like, this is in the bag, right?
They have a chance to like put it to bed in Q1.
1.8 in one quarter.
No, like I mean, like the run rate.
Yeah, I know
exactly, and where they're right. Page 26 on the graph now very clearly says it. The base is 2020, right? So let's just you see that on the bottom when you page 26. When you pop it up, no problem. So it says on there in blue 50% CAGR since 2020, right? That's the point. So we just all have to make clear that everybody hears it out there. That this is the base now. This will make a straight line from 2020 to 2030. And again, if you look at 2023, that is 1.8. That's it. This is not below or above. This is just the point.
Well, they're going to do that. They're obviously going to do that this quarter, right? I mean, this is. It sounds like that's where they're going to put their foot in the sand. I think the most important part of this whole conversation that's getting lost, though, and again, this is not related to the stock, but it's related to the strength of the business, is that even if it's 1.6. Even if they come in at 1.6, what's the rest of the car industry going to do this year? It's going to be a disaster. Sure. It's not going to look good. So within that context, any sort of growth, and I think like even for me, that's somebody that's a bull, that's like that wants the 2 million number, that wants them to really blow everything out of like just blow everything out of the water, in a landscape where the industry that they're entering is going to probably shrink again this year because of higher interest rates and just a general slowdown in the economy. you still have a company that's growing. Who cares if it's 40%? Still going to grow. And what does that imply from a perspective of like price earnings if they're growing to 1.8 million? I'm going to sit down and do some math actually. What does that mean for like future earnings, right? It's like at current pricing, it's probably like what, 30 PE or something like that? You know, so does a 30 PE make sense for a company that's grew 40% year over year, who has Cybertruck launched now and ramping, who's got a compact car they're going to be unveiling in about 2 months time, a month and a half? The story's starting to turn for me a little bit, right, from that standpoint. So at least from the last few weeks. And I think that's the one thing that's sticking out to me is that even within all this, like not really noise, but like these legitimate concerns, the next stage of the company, I think, is not even rooted in that 1.4 or 1.5. It's like this longer drawn out picture that's about to sort of take hold, you know. And I know you guys have been saying this too. I just think it's sort of, that's what my mind keeps going back to. It's weird.
May I ask something organizational? Is it in about 20 minutes that we have
20 minutes.
the call? Okay, perfect.
Yep.
Would you mind that we look together at those pictures, page 14 and onwards? Because first of all, I find they're beautiful, and it's all good talking about numbers, and I think that's a good way of getting into the mood for exactly. Yeah.
Giga Nevada looks so sexy.
Berlin, come on. Berlin looks great. I love this. I don't know whether this is particularly German, but you see that first wall on the left, black and whatever. And they're just sick, right? All of that. Who does that? It's beautiful.
A robot did that. Oh, you mean like in general? Yeah. Sorry.
It's absolutely beautiful.
I took you too literal.
No problem at all. No problem at all. And I always try to look. Go ahead.
I want to ask you guys all one question. Simple for this earnings call. What's the one major thing you're keeping keeping an eye out for this quarter's call? It could be 4680. Could be guidance we kind of got, maybe guidance on margin. Like, what is that one thing that you guys are looking out for? I'll start.
You know that. Go ahead.
For me, I think I want to hear Drew Baglino talk about 4680 and how the ramp is going to go. Not how it's gone, I think we all know, but how it's going to go and where he sees it by the middle of this year. That's my big one.
Okay. Me, you know that I want a boring call. So I wish they just, everything is easy peasy. I was actually wondering, do you think there is a chance they bring Tom Chu on the call?
Ooh,
March
that's
1st?
That's interesting. I mean, they might even have him at this call because they have other executives on the earnings call, right? Yeah.
Don't boycott my question, though, guys. I want to hear it.
$2. Thanks. I get one sip out of Alexandra's wine cup. Just kidding. Thank you so much.
You don't.
It's all hers. For me, I really do think with the price cuts that happened in the last week or so, I'm really curious to hear if they're going to give us any hints about where they expect margins to fall under this new pricing. So like help us understand how to think about Tesla's margin in 2023 with a much lower ASP relative to last year, and how are your economies of scale going to help you? Like, are you expecting it to be similar margins, or are you expecting it to be lower margins or higher margins? Forget FSD. If I can get some context there, I think it's going to be helpful for me to think about that a little bit.
Okay.
Yeah, that's my answer.
Alexandra?
Well, I already said I think it's going to be a boring call, but maybe Tom Chu is going to be there. I mean, obviously, I would like to know the energy ramp and all that, but it's too little at the moment to really read much into the tea leaves, right? So I was not excited for today, and I don't think this is going to be a major mover.
Okay.
Oh,
hey,
Matt, how's
Mr.
it going?
Energy,
Hey, Matt.
Mr. Energy.
Which is ironic, given that I don't sleep with the kids. Sleeping with the kids, I worded that wrong.
I want. Can you all please pull up slide? Can you all please put up slide 16 and ask Matt what this is? Because is that what the megapacks look inside? Oh, sorry, we didn't ask Nick yet for what he's interested in.
I want to hear Nick.
Yeah, Well, my first comment is Matt just trumped what Yashu said earlier. So
yeah, that's true.
that was wild. I didn't think that could be possible. I'll just quickly say, I'll cheat. The one thing is I want to understand the whole FSD take rate because they said 400,000 people now have it, but they stopped telling us the take rate or the amount of people. So I thought that was interesting. But I want to know more about what Elon and the team are seeing for the economy because I'm with Alexandra. I think without a doubt you could speak a recession into fruition. I mean, I'm seeing it everywhere. Everyone's cutting costs. Everyone's slowing down. You saw Microsoft. I think Microsoft is a telltale sign. And then that's from the software side, right? But then you also see it, to hear what Elon and Tesla and them have to say. I don't know. That's what I really want to understand is what they're seeing, how they're interpreting all of this. And I think that could be a good guidance for everything, for the entire economy.
Okay. Matt, the question is, what's the one major thing you're keeping an eye on for this earnings call?
And then give us your thoughts too on what you thought from the deck.
Yeah, so I'm hoping they give some guidance specifically around energy and the IRA. I mean, this is something that we've had a really hard time as a community just trying to wrap our heads around. I mean, there's so many different provisions. There's all these tax credits. Some of them are direct pay. And then there's the introduction of the corporate alternative minimum tax, which could potentially like mitigate or eliminate all of the benefits of this entire kind of IRA tax benefit scheme. But it's really meaningful. I mean, I put out a tweet earlier today that just the credits alone, whenever they scale up to 100 gigawatt hours at this of this new Giga Nevada plant that they were talking about, the credits alone are worth about $5 billion, which is more than the capex of the plant. So you're talking about like a 1-year payback potentially, which is just mind-boggling. That's without taking into account any of the margin from the actual products that they're selling. So it's such an important item to the financials, and the company has been silent on it so far. I mean, this is probably the right venue to talk about it, but they're not going to do this. I'd love like a 20-minute like nerding deep dive into like all the different provisions or something like that. But absent that, at least some sort of guidance on what they expect, the material changes to be going forward, because it's a meaningful amount of money, and I don't think anybody frankly has their head around it yet.
Matt, since you know that industry so well, would you mind commenting on that page 16? If that is how you imagine the inside of the megapacks to look like? I mean, I know you went there and.
Yeah, so I didn't get to go inside the facility, obviously, but I mean, yeah, that looks about like what you would expect, I think. It's pretty clear those are the CATL battery packs, it looks like. So they're essentially just putting them into that huge frame. I'm not sure exactly where the inverters are. There's obviously like the cooling situation up top. But I mean, this looks very similar to a lot of other, kind of energy cabinets that I've opened up in my days. But this just happens to be a lot of batteries all jammed together. So no, I mean, I'm not an expert on the hardware and from an engineering standpoint, but it's not surprising. I mean, it's so simple. That's what's so exciting.
Exactly. And the back of the factory, meaning what's behind the Megapack, that it doesn't look optimized at all. It looks like a big workshop where they now have the doors or whatever they're going to put in front of those. Is that how you imagined the inside when you were there last week?
Well, I got to say, my biggest takeaway in terms of what surprised me is just how small this site is. I don't have the square footage or anything like that off the top of my head, but this is not a gigafactory. I mean, you've got Gigafactory Nevada pumping out 37 gigawatt hours, I think, and they're doing 40 gigawatt hours here. But it's just because they're kind of taking these third-party cells, jamming them all together, and adding on the cooling and all the different components, and then shipping them out. So it really is like, I think there's frankly less to optimize there than maybe there would be if this is something that you're kind of building from the raw materials in one side of the plant, finished product out the other. This is like a very different product than that. So it's a weird site. It doesn't really fit with any of Tesla's other kind of manufacturing facilities in my view. So yeah, it's a weird one.
Okay, got that. Because I mean, I'm just sitting there, wondering. I'm like, I mean, and we all saw that video a couple of weeks ago, right? Where it looked so automized. And then I see that, I'm like, well, maybe that's just the last step, right?
Yeah, I mean, it's not like with a car, what you're pumping one out every, what is it, 60 seconds, 120 seconds, something
40.
like that. Well,
No,
that's
we're
across
not
all
at
plants,
40.
right? So
Yeah.
but that's so like if you were to just say that the Shanghai, how often are they pumping one of those out? Let's just call it once every minute or something like this. They're pumping one of these out, which is roughly the same size as a car, maybe a little bit bigger, every hour. So I think the benefits that you'd squeeze out from, really shaving every, dime out of the manufacturing process is a little bit smaller, just because the ASP is so much higher, than a car. So to me, it does kind of make sense that this would be a little bit more of a kind of boutique process. This is kind of how I imagine they're assembling semis right now, right? Like that's not an optimized process.
Exactly.
I'm sure with the new Giga Nevada plant where they're actually making the cells in-house, some of them for stationary storage, I'm sure some like that process is going to look way different than this mega pack process. And I'm sure the margins will be better there too.
Yeah, I think what's interesting about Tesla is like just they're very good at taking a rinky-dink place and having to crank out crazy amounts of production or whatever. So when I was there, the facility that we had, it was distribution. It's a 130,000 square foot facility, but we were doing probably, I don't know, 3 times the volume to a compared like if you take just a standard building that would do the same thing, we were a lot more efficient. So even if it looks like a mess in the background, that eventually will turn into something that's going to be significantly quicker. And so I'm not surprised at all seeing that, like especially because they just started the facility. In a couple of years, that's going to look completely different. I just wanted to throw that out there. There was one thing I wanted to ask you, Matt. What did you think? What did you think of the report? What's your sort of prevailing thought here? And just FYI for the audience, the call was started. Sorry, Matt. The call will start in 8 minutes, and then we'll be covering that, and then we'll also have a post-call coverage as well. Sorry, go ahead, Matt.
Yeah, it was, I think, pretty uneventful. There wasn't any huge surprise there. It was certainly a lot lower than the kind of optimistic numbers that I'd been modeling. So my takeaway personally is just that I need to, go back and figure out what I got wrong in my own model. But in terms of Wall Street's expectations,
I'm kidding.
It wasn't. There wasn't anything, that really stuck out. I mean, a couple things just off the top of my head. You saw roughly $200 million of gross margin on energy. That was really nice to see. You're essentially doubling that gross margin quarter over quarter. Services was profitable again, which I didn't think they would be. So it does give a little bit of credibility, I think, to the long-term profitability and cash flow prospects of some other parts of the business, which have historically just been 100% ignored by every Wall Street analyst. So that's some stuff that was good on the positive side. If I were to put on my critique hat, so like what's a bear or someone who's going to pick this apart going to say, it would probably be some stuff on quality of earnings. So you had I forget the exact number, but something in the order of $300 million of FSD revenue, which was deferred, which is included in the adjusted EPS. So that's boosting EPS. And then your credits were abnormally high too, about 150 million higher than they normally are. So, you've got combined somewhere around $500 million of a boost. And then the tax rate, the effective tax rate was also on the low end. So a couple things that, if you want to be a bear and back those out, you can say, okay, adjusted EPS should have been a bit lower than that. And it's actually it's a miss when you make those adjustments. So, but to what I said at the beginning, there's something for everybody in this report. A lot of good stuff, a lot of stuff that's, maybe not super exciting. And the one thing personally, I think I'm probably most disappointed on is the guide of 1.8 million units. I don't know, did you guys talk about that already?
Yeah.
Oh, yeah.
What are your thoughts?
So I'm hoping they're just sandbagging a little because their installed capacity that they list in there is 1.9, and they've built up a lot of inventory, more than they've ever had before. So maybe, then that's probably the prudent thing to do is just say, 1.8 in a weak economy, and then if they hit it, great, they met their targets, and if they deliver 1.9 or 2, then great. That's they can claim victory on that. So, but I am hoping it's just sandbagging and that's not the actual target.
Yeah.
That's kind of the conclusion we came to, is like if you just take Q4 They're like you said, like the installed capacity is right there, and then so they have that chart on page 26 where they went back to 2020, did a 50% CAGR on top of that, and they arrived to the 1.8 million roughly for 2023. So I think it sounds like it's also like a resetting of expectations as well, so that the narrative doesn't get ahead of them. Yash, you shared a tweet. Let me pull it up real quick, and the call will start in 5 minutes. Just give everybody a heads up. We will be covering the call live, and then we'll also just give a shout out. So this is probably one of the bigger streams here covering this event. So I really want to thank everybody for joining us today. We were at, I think, 5,300 concurrent at one point, at least on my channel, and I don't know how you guys were doing on yours, but amazing. Thank you all so much for joining us. I hope we're giving you valuable, informative info. Go ahead, Yash. Go ahead and read us through this tweet here.
Yeah, I thought this tweet was really insightful from Forward Cap about Tesla being one of the fastest growing companies at history at this scale. Because a lot of people talk about, okay, well, you can grow from 100 million to 300 million and 3x. Of course, you can continue that growth rate. But if you look at the other mega caps here at these, and it's revenue in billions of dollars on the y-axis and years on the x-axis, and you'll see Tesla is outpacing Facebook, Apple, Amazon, Google, Microsoft in the years that they grew at these revenues. And of course, it makes sense. I mean, Apple is selling, or sorry, did I say Apple? I meant to say Amazon, Google, Microsoft. Obviously, these guys are not selling $50,000 products. So Tesla does have an advantage there with revenue. But to grow revenues at these levels in these, let's say, close to $100 billion now a year, it's quite the feat. It's what we're seeing going on here.
This is an insane chart to me because Facebook, software. Apple, software plus phones. Amazon, distribution plus software with AWS. Google, software. Microsoft, software, right? Tesla, large-scale manufacturing. Typically, you don't see these kind of growth rates for a large-scale manufacturer because it's extremely difficult to manufacture things because it involves a lot of humans. It involves a lot of capital, and it involves a lot of processes and machinery and things that can go wrong. That's wild. And I'm glad that somebody's sort of picking up on this. I'm curious if this will ever, get attention on like a place like CNBC or something, but that's wild. That's actually kind of freaking crazy. So Tesla's already at 81 billion yearly. And next year, if they grow, say 40%, I mean, it's not a 1-to-1. So next year there'll be a $130 billion, no, $115 billion company, roughly. 81 times 1 point, call it 3, 105. Can't do math. 105 to 110. So they're going to breach $100 billion in revenue next year.
Yep.
Exciting stuff.
Yeah.
All right, let me go ahead and pull up the
I think it might be time almost. A couple minutes here. Be careful with the copyright music they play on this thing. It's like usually some sort of techno dance thing or whatever. One time I was streaming, someone told me to pull up the Apple earnings call before the Tesla one, and the whole stream got copyrighted because of the 5-second techno music. God. So YouTube. So Elon is going to be on this call, is assumption, right?
Oh,
I think so.
Yeah. Do you want us to stay here, or shall we come back at the end?
Please stay. I mean, feel free to stay. So what I'm going to do is I'm going to take notes as the call goes on. And I'm going to have it on my screen. But yeah, please stay. You can stay. You can just have your thing. I'm just going to keep this the audio in the background. I'll be taking my notes as we go along, and then I'll share a document as well. But I'm going to keep my ears open for this. This shouldn't have any echo. All I ask is that once this goes live, just mute your mic so we don't have echo. And then once the call is done, we'll do a recap and see what people thought. Yeah. All right. And I have the music on in my background just to make sure once they come on, we can listen.
Now, I don't want you to pull up any pictures anymore, but those that have the report there, is 19, slide 19, the Nevada factory, is that how it looks now, or is that after the expansion?
Slide 19.
After the expansion.
After the expansion, yeah.
After.
I think
so you see,
yeah,
so you see
render.
that came out as a press release this morning, and it's already in there. That's why what really gives me this comfort that this was all nicely timed.
Yeah, got to be careful looking into these renders too closely.
Yeah, that's for sure. Yeah.
Someone will inevitably start looking at the parking lot and counting the cars to calculate capacity or something.
And the drone.
Yeah.
And I remember in the original render of Nevada, there were supposed to be wind turbines and stuff installed, and they obviously never did that. They've been really late with solar too, so it'll never look exactly the same.
Yeah.
Just going to go ahead and share the link to the notes. How am I going to do this here? Let's see. I'm going to do it like this.
I would just do it after. For everyone, you mean?
So people like to kind of like follow along. Notes for Q4 call.
You could put it on your. You can just tab it because your audio is still going to be on, right? Like you don't need to share. There's no. Like we're in 2023. Can they not do video earnings calls now and to like show us their expressions of, when they're laughing at certain statements or something or questions? Like, what are we doing? We're just listening to audio.
I think it's for legal liability. I think there is a reason to do it as crappy and as basic as possible. I tell you, I really do believe so.
Yeah. I mean, what could be done via video that would...
Yeah, but it would give way so much more, right? Interactions, whatever. You can mute a mic and nobody knows about it, while on camera you can do much less.
Yeah. Yeah, it's just crazy. Even like you talk about the analysts when they ask questions, half the time they're muted, they can't figure it out. Like, what are we doing, guys? It's 2023. Let's figure this thing out. It's kind of like they're all living at Matt's apartment with his Starlink internet.
Lack of Starlink, you mean?
You know that I'm actually doing it today, Starlink as well. Our Cox line was down this morning. Thank heavens I have a Starlink on the roof, and here I am. Yeah, and it's good, right? It's really, you don't feel any lag or any slow motion, right? Oh, good.
For those that are just joining us, thank you very much. We're just waiting for the earnings call to start. It should start here any second. Just listening to the music, and once the music stops, I'm gonna go ahead and boost the volume so all of us can listen to the call together.
Sweet.
Yeah, I don't know if this one's gonna be that. I mean, it's after hours and the report. If it's a boring report, boy, are we? I think everybody's gonna be very happy.
Watch the first sentence be about Tesla bot. Elon just like, I want to dedicate this call towards a Tesla bot.
Yeah. It'd be like, I really do think I should be spending more time on Twitter.
Do you guys remember like where you were when you heard Elon say boring, boneheaded questions will not be tolerated or whatever that one time?
Yes, I was working. I was at Tesla working.
Oh, wow.
I was driving and I was just like, I got nervous. I was like, oh man, this is.
Was that to Tony?
I don't remember who it was. Was it Ryan Brinkman? Maybe. I don't know.
I don't think that person on the calls anymore.
I was on a ship in the middle of the ocean.
Really? Wow.
Yeah. Well, in the middle of the Gulf of Mexico.
That's dedication. You're on a ship. You're listening to a Tesla earnings call.
Well, I called in from a satellite phone too.
Oh,
wow.
Here we go.
Crazy.
All right, we're live. Please mute.
James says it was.
This is Martin Vieca, VP of Investor Relations, and I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q4 results were announced at about 3 p.m. Central Time in the update deck published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you, Martin. So just going through a 22 recap. It was a fantastic year for Tesla. It was our best year ever on every level. Team did an amazing job. It's an honor, of course, to work with such an incredibly talented group of people. So in 2022, we delivered over 1.3 million cars and achieved a 17% operating margin, the highest among any volume car maker. I think maybe among any car maker. While doing so, we generated $12.5 billion in net income and $7.5 billion in free cash flow. Importantly, the Tesla team achieved these records despite the fact that 2022 was an incredibly challenging year due to forced shutdowns, very high interest rates, and many delivery challenges. So it's worth noting that all these records were in the face of massive difficulties. A credit to the team for achieving that. The most common question we've been getting from investors is about demand. Thus far, so I want to put that concern to rest. Thus far in January, we've seen the strongest orders year to date than ever in our history. We currently are seeing orders at almost twice the rate of production. So I mean that's hard to say whether that will continue at twice the rate of production, but the orders are high, and we've actually raised the Model Y price a little bit in response to that. So we think demand will be good despite probably a contraction in the automotive market as a whole. Basically, price really matters. I think there's just a vast number of people that want to buy a Tesla car, but can't afford it, and so these price changes really make a difference for the average consumer. It's sometimes for people who are have a lot of money, they sort of forget about how important affordability is. And it's always been our goal at Tesla to make cars that are affordable to as many people as possible. So I'm glad that we're able to do so. So I think it's a good thing, all things considered. We're also making very good progress on cost control, and we're seeing the costs of production in Berlin and Austin drop commensurate with the growth in production, so as you'd expect. So, with respect to Autopilot, as of now, we deployed full self-driving beta for city streets to roughly 400,000 customers in North America. This is a huge milestone for autonomy, as FSD beta is the only way any consumer can actually test the latest AI-powered autonomy. And we're currently at about 100 million miles of FSD outside of highways. And our published data shows that improvement in safety statistics is very clear. We would not have released the FSD beta if the safety statistics were not excellent. Regarding batteries, production rate of 4680 cells reached 1,000 cars a week at the end of last year, and we're increasing capacity for 4680 cells by another 100 gigawatt hours, as announced at Giga Nevada yesterday. Our long-term goal is to get to well in excess of 1,000 gigawatt hours of cells produced internally, and continue to use other cell providers. So to be clear, we will continue to use other cell providers, just that the demand for lithium-ion batteries is quasi-infinite and will be for quite some time. So we feel we can scale a lot faster using both suppliers and internally produced cells. And we've got an amazing plan for making the 4680 cell low cost and high energy density. So energy storage also saw record growth, and that is continuing to accelerate. That's always worth remembering that the three pillars of a sustainable energy future are obviously electric vehicles, solar and wind, and then the third key item is stationary storage to store the energy from solar and wind, because obviously the sun doesn't shine all the time and the wind doesn't blow all the time. So if you have those three things, you can convert all of Earth to a fully sustainable situation, many times over, actually. So I would like to just make it clear that there is a path to a fully sustainable future for humanity, and our goal at Tesla is to accelerate progress on that path as much as humanly possible. So so we were obviously ramping up megapack production, and we expect it to grow at a rate quite a bit faster than our vehicle output. So in conclusion, we're taking a view that we want to keep making and selling as many cars as we can. We believe we can keep pushing for strong volume growth while retaining the industry's best operating margins. As we mentioned many times before, we want to be the best manufacturer. But really, manufacturing technology will be our most important long-term strength. So, and we'll talk more about our upcoming plans at the March 1st Investor Day. And lastly, I want to once again thank all of our employees for delivering another record-breaking year. Congratulations, guys.
Thanks, Elon. And I think Zach has some opening remarks as well.
Yeah, thanks, Martin. So as Elon mentioned, 2022 was a terrific year for Tesla. I also want to congratulate the Tesla team and also say a thank you to our suppliers for your support during quite a volatile year. On a full year basis, revenue increased over 50%, operating income doubled, free cash flows increased over 50%, and our margins remained industry leading. Additionally, we continue to make progress on overhead efficiencies as non-GAAP OPEX as a percentage of revenue improved further. For Q4 specifically, sequential and annual margin was impacted by ASP reductions as we were managing through COVID impacts in China, uncertainty around the consumer tax credit in the US, and a rising interest rate environment. Note that in 2022, rising interest rates alone had effectively increased the price of our cars in the US by nearly 10%. Additionally, COGS per unit has increased on a year-over-year basis, driven primarily by three factors. First is raw materials and inflation led by lithium prices and discussed at length in previous calls. Second, we are working through the early ramp of inefficiencies of our Austin and Berlin and in-house cell production factories. Third, our vehicle mix over the last year has moved more heavily towards Model Y, which carries a slight cost premium to Model 3. Partially offsetting these impacts, we've continued to execute on Tesla controllable cost reductions in line with the progress we've made in prior years. These improvements include our continued work to gradually move towards a regionally balanced build of vehicles. The energy business had its strongest year yet across all metrics, led by steady improvement in both retail and commercial storage. While much work remains to grow this business and improve cost, we believe we are on a good trajectory. As we look towards 2023, we're moving forward aggressively, leveraging our strength and cost. There are three key points I wanted to make here. First, on demand, as Elon mentioned, customer interest in our products remains high. Second, on cost reduction, we're holding steady on our plans to rapidly increase volume while improving overhead efficiency, which is the most effective method to retain strength in our operating margins. In particular, we're accelerating improvements in our new factories in Austin, Berlin, and in-house cells where inefficiencies are the highest. But we are attacking every other area of cost and unwinding cost increases created from multiple years of COVID-related instability. This includes logistics, expedites, accumulation of material buffers, part premiums, productivity, and overheads as an example. As the world transitions from an inflationary to deflationary environment, we expect a strong partnership with our suppliers on this journey as well. In net, we've priced our products with a view towards a longer-term cost structure. Thus, there will be an impact on operating margin in the near term. However, we believe our margins will remain healthy and industry-leading over the course of the year. Third, we are continuing to ensure funding is prioritized for our long-term roadmap. This includes expanding in-house cell production, bringing Cybertruck to market, development of our next-generation vehicle platform, expansion of our manufacturing footprint, and growth of the energy business. We're looking forward to discussing these plans in more detail on our Investor Day in a month. Thank you.
Thank you very much, Zach. Let's now go to investor questions. The first question is, some analysts are claiming that Tesla orders net of cancellations came in at a rate less than half of production in the fourth quarter. This has raised demand concerns. Can you elaborate on order trends so far this year and how they compare to current production rates? I think
we already answered that question.
Yes, exactly.
The demand far exceeds production. and we actually are making some small price increases as a result.
Thank you. The second question is in similar vein. What is the initial reaction been to global price reductions in early 1Q 2023, specifically in terms of order intake levels? We've answered that one as well.
Yeah.
So let's go to the next one. The next investor question is, will Tesla be able to take full advantage of advanced manufacturing production credits for battery cells packs? So $3,700 per long-range Model 3 and Model Y. It's $45 a kilowatt hour for autos and energy products. And how much does Tesla expect to earn in the coming year from these credits?
I'll say a little bit about it, then I think Zach will add some. Long term, we expect these the value of these credits to be very significant. You can do the math. If we were to get anywhere near 1,000 gigawatt hours a year of production, or even a few hundred gigawatt hours, it's very significant. So, but the credits do rely upon domestic manufacturing, and in the case of Panasonic with domestic manufacturing, we're splitting the value of the credits. So the value of the credits this year will not be gigantic, but I think it could be gigantic in the future. We think it probably will be very significant in the future.
Yeah, just to add and put some boundaries on what we're expecting in terms of impact to Tesla for this year. So different products we think will get different amounts of credit. The regulations here are still in flux, and there continues to be updates. So this is just our best understanding at the moment. But we think on the order of 150 million to 250 million per quarter this year, and growing over the course of the year as our volumes grow. And part of the work we're doing here, which is part of what this incentive package is trying to incentivize, is, as Elon mentioned, to move more manufacturing onshore in the United States, which is Tesla's plans anyways. And so I think we're pretty well positioned over the coming years to take advantage of this. But then also, part of what the goal of this incentive package is to improve adoption from our customers. And so we also want to use these incentives to improve affordability as we think about what the price points are on our products going forward. And so as we were thinking about our pricing changes in the US a couple of weeks ago that we announced, we were looking at what the credit benefit to Tesla would be to make sure that customers are able to receive the benefit not only from this that we're receiving to some extent, but also on the consumer-facing side, which is currently $7,500 per car of tax credit, assuming that subject to the MSRP caps and the income caps. So we want to use this to accelerate sustainable energy, which is our mission and also the goal of this bill.
Thank you very much. The next question from investors is, after recent price cuts, analysts released expectations that Tesla automotive gross margin excluding leasing and credits will drop below 20%, an average selling price around 47,000 across all models. Where do you see average selling price and gross margins after the price cuts?
Yeah, go ahead.
Yeah, I'll jump in on this. So, there's certainly a lot of uncertainty about how the year will unfold, but I'll share what's in our current forecast for the moment. So, based upon these metrics here, we believe that we'll be above, both of the metrics that are stated in the question. So 20% automotive gross margin, excluding leases and red credits, and then 47K ASP across all models. And so, two other comments I want to make on this, just tactically on sequential ASP changes from Q4 to Q1. Just as a reminder, the ASP reduction is not as large as the reduction in configurator prices. As in Q4, we had backlog customers that we're delivering cars to at a lower price book, given that backlogs had been so long for so much of 2022. But then also there are various programs in place that we used in Q4 that lowered ASPs. The second comment I wanted to make here is that, as a management team here, we're most focused on on what our operating margin is. And so, as other areas of the business become more important, particularly the energy business, which is growing faster than the vehicle business, and as we're heavily focused on operating leverage here, improving efficiency of our overheads, we think the right metric for us to be focused on is operating margin. And so I wanted to make sure that I shared that with the investor community as well, because that is what we're primarily managing to now.
Yes, something that I think some of the smart retail investors understand, but I think a lot of others maybe don't, is that every time we sell a car, it has the ability just from uploading software to have full self-driving enabled, and the full self-driving is obviously getting better very rapidly. That's actually a tremendous upside potential, because all of those cars, with a few exceptions, I mean, only a small percentage of cars don't have hardware 3. So that means that there's millions of cars where full self-driving can be sold at essentially 100% gross margin. And the value of FSD grows as the autonomous capability grows, and then when it becomes fully autonomous, that is a value increase in the fleet that might be the biggest asset value increase of anything in history. Yeah.
Thank you. Let's go to the next investor question. Since Elon started political influencing, polls from Morning Consult and YouGov show Tesla brand
you can crush them with your life.
Show Tesla brand favorability declining in 2022 and division among partisan lines. Such brand damage can impact demand. Does Tesla track favorability, and how will any brand damage be mitigated?
Well, let me check my Twitter account. Okay, so I've got 127 million followers. It continues to grow very rapidly. That suggests that I'm, reasonably popular. It might not be popular with some people, but for the vast majority of people, my follow account speaks for itself. I'm the most interactive account, social media account, I think, maybe in the world, certainly on Twitter. And that actually predated the Twitter acquisition. So I think Twitter is actually an incredibly powerful tool for driving demand for Tesla. And I would really encourage companies out there of all kinds, automotive or otherwise, to make more use of Twitter, and to use their Twitter accounts in ways that are interesting and informative, entertaining, and it will help them drive sales, just as it has with Tesla. The net value of Twitter, apart from a few people are complaining, is gigantic, obviously.
Thank you. Let's go to the next question. Please provide a detailed explanation of where you are on the 4680 ramp. What are the current roadblocks, and when do you expect to scale to 10,000 vehicles a week?
Yeah, thanks, Martin. First, I just want to say congrats and thanks to the Tesla 4680 team for achieving 1K a week in Q4. It was no small feat. Definitely a result of, more than a couple of years of hard work. As far as where we stand in Texas, 1 of 4 lines are in production, with the remaining 3 in stages of commissioning and install. Really, our 2023 goal as a 4680 team is to deliver a cost-effective ramp of 4680s well ahead of Cybertruck. Focus areas are dialing in and improving the quality of the high-volume supplied mechanical parts and driving factory process yields up as much as possible. Between the 2 of those things, if we achieve those key goals, we'll be well set up for a major 4680 year in 2024.
Thank you. Next investor question is, Elon said previously that FSD Hardware 4 will most likely come first in Cybertruck. Is that still the current plan? Do you expect there to be an upgrade path for Hardware 3 cars to Hardware 4?
Yeah, Cybertruck will have hardware 4, and basically, for 2023, Cybertruck will not be, a significant contributor to the bottom line, but it will be in next year. So it's an incredible product. I can't I can't wait to drive it personally. It will be the car that I drive every day. Actually, I'm wearing the T-shirt with the smashed glass. It's just one of those products that only comes along once in a while, and it's really special. So, yeah. So, with respect to upgrading cars that have hardware 3, I don't think that will be needed. Hardware 3 will not be as good as hardware 4, but I'm confident that hardware 3 will still far exceed the safety of the average human. So what we're aiming for is like, well, how do we get ultimately to, let's say for argument's sake, if hardware 3 can be, say, 200 or 300% safer than human, hardware 4 might be, 500 or 600%. There will be a hardware 5 beyond that. But what really matters is are we improving the average safety on the road? But it is the cost and difficulty of retrofitting hardware 3 with hardware 4 is quite significant. So it would not be, I think, economically feasible to do so.
Thank you. The next question is for Zach. Zach, when do you think Tesla Insurance will become big enough revenue source to warrant providing more details in the financials of the business so investors can compare it to other insurance companies?
Yeah, I think it's probably going to take some time before this business is large enough for specific financial disclosures. But I'm happy to provide an update on where we stand in the business. So we're currently at a $300 million annual premium run rate as of the end of last year. We're growing 20% a quarter, so it's growing faster than the growth in our vehicle business. And in the states in which we're operating, on average, 17% of the customers in those states are using a Tesla insurance product. So, and that number continues to tick up as we spend more time in markets. And we see most of the adoption occurring when folks take delivery of a new car, as they're setting up insurance for the first time, as opposed to going back and switching when they already have insurance set up. So there's an inherent stickiness in the insurance business. But
yeah. Sorry, go ahead.
No, I was just going to say, just as a broader reminder on kind of the motivation for starting this business, it was to improve, and still is, to improve the total cost of ownership of our cars, given that we're seeing high premiums of insurance from third-party companies. And that remains our priority here. We'll obviously run this as a healthy business, but we want to make sure we keep our costs low and insurance stays affordable to our customers.
Yeah, and so there are two really important side benefits for Tesla Insurance that are worth mentioning, one of which Zach alluded to, which is that just by Tesla offering insurance for our cars at a competitive rate, that makes the other car insurance companies offer better rates for Teslas. So it has a bigger effect than you'd think, because it improves total cost of ownership or insurance costs even when they don't use Tesla Insurance, because now the Geicos of the world have to compete with Tesla and cannot charge outrageous insurance for Teslas. So it's great. So it has an amplified effect, very important. Then it is also giving us a good feedback loop into minimizing the cost of repair of Teslas for all Teslas worldwide. Because we obviously want to minimize the cost of repairing a Tesla if it's in a collision, and for Tesla Insurance. And previously we didn't actually have good insight into that, because the other insurance companies would cover the cost, and actually the costs in some cases were unreasonably high. So we've actually adjusted the design of the car and made changes in the software of the car to minimize the cost of repair. Obviously minimize the best repair is no repair. Avoid the accident entirely, which since every Tesla comes with most advanced active safety in the world. Whether or not you buy Full Self-Driving, you still get the intelligence of Full Self-Driving for active safety, active collision prevention. So it's giving us this really good feedback loop for, again, reducing total cost of ownership, and also just figuring out how to get, if somebody's car is in an accident. Most accidents are actually small. They're like, a broken fender or scratched side of the car or something like that. They're not, that's the vast majority of accidents. But we're actually solving how to get somebody's car repaired very quickly and efficiently and back in their hands. And like I said, those improvements actually apply then to all cars. And like we're making, just to emphasize another key point, because some of these points might be less, so I apologize for being repetitive, but it's remarkable how small changes in design of the bumper and improving the logistics of providing spare parts needed for collision repair have an enormous effect on the repair cost. So if you're waiting for a part to get repaired and that part takes a month, now you've got a month of having to rent another car. It's very extremely expensive, and of course you're missing the car that you love and actually want to drive. So this is actually a very significant effect on total cost of ownership and customer happiness.
Thank you. The next question from investors is Cybertruck production still on track for mid-year? We do expect production to start, I don't know, maybe sometime this summer, but I always like try to downplay the start of production, because the start of production is always very slow. But it increases exponentially, but it's always very slow at first. So I wouldn't put too much stock in start of production. It's kind of when does volume production actually happen, and that's next year. Thank you.
Yeah, that's right, Elon. Like, just to emphasize on that, we've started installation of all the production equipment here in Giga, Texas. Castings, GA, general assembly, body shops. We built all our beta vehicles, some more coming still in the next months, but as you said, the ramp will really come 2024.
Yeah, exactly.
Thank you. And the last investor question is, with near infinite global demand for energy storage,
yeah, seriously,
where should Tesla build the next megapack factories? How many are needed on each continent?
It's a good question. It's not something I think we'll provide an update about that in the future, but it's something we're thinking about very carefully. Really kind of like, what is the fastest path to 1,000 gigawatt hours a year of production? You'll see announcements come out later this year and next that answer that question.
Thank you. Okay, and now let's go to analyst questions. The first analyst question comes from Rod Lache from Wolfe Research. And Rod, feel free to unmute your mic.
I think I'm unmuted. Can you hear me?
Yes, we can.
Okay, thank you. Firstly, it sounds like your 1.8 million unit volume indication for this year is somewhat more supply constrained than demand constrained. Then I have a follow-up on cost. But is that an accurate statement?
Well, okay. I mean, our internal production potential is actually closer to 2 million vehicles, but we're saying 1.8 because I don't know. There just always seems to be some friggin' force majeure thing that happens somewhere on Earth, and we don't control if there's like earthquakes, tsunamis, wars, pandemics, etc. So if it's a smooth year, actually, without some big supply chain interruption or massive problem, we actually have the potential to do 2 million cars this year. We're not committing to that, but I'm just saying that's the potential. So, and I think there would be demand for that too.
Yeah,
Just ruined
thanks for
it.
clarifying that. And on the cost side, the numbers that we just saw from you, as you pointed out, were weighed down by the 4860 ramp, the Berlin, Austin, Giga castings processes not at rate. Can you give us a bit of an indication of the headwind that you're absorbing from those things, like you did last quarter? And then lastly, on cost, do you think that we can tease out an interesting data point from on where battery costs are headed from this announcement that you just made last night? If I'm correct, it looks like the investment cost per kilowatt hour is less than half of what I've seen anywhere else, maybe $30 a kilowatt hour for that capacity.
I don't think we want to say the specific number, but it's interesting if you look at the size of Giga Nevada that is allocated to make 100 gigawatt hours is a small fraction of the size that currently makes about 35.
Yeah, I mean, the goals we outlaid at Battery Day on reducing the investment required to deploy cell manufacturing, I mean, that's been a key focus of ours, and the team is doing a good job hitting the marks on that focus.
Yeah, and it goes back to the point I was making, and I said this several years ago. I think Tesla's really the competitive strength that will be by far the hardest for other companies to replicate is Tesla being just damn good at manufacturing and having the most advanced manufacturing technology in the world. And if you've got that sort of advanced manufacturing toolbox, you can apply it to many things, and we're applying it now to battery cells. I should also say that we have other products in development. We're not going to announce them, obviously, but they're very exciting, and I think we'll blow people's minds when we reveal them. Tesla has the most exciting product roadmap of any company on Earth by a long shot, and we'll continue to, I think, be in that position. We got more great ideas than we know what to do with here. So the future is very exciting. As I said in the last call, there's going to be bumps along the way, and I think we'll probably have a pretty difficult recession this year. Probably, I hope not, but probably. And so one can't predict the short-term sort of stock value because when there's a recession and people panic in the stock market, then prices of stocks, both value of stocks, can drop sometimes to surprisingly low levels. But long term, I am convinced that Tesla will be the most valuable company on Earth.
Thank you. And I think, Zach, there was a question on cost headwind in Q4.
Yeah. I mean, our weighted average COGS for the company, if you were to assume Austin and Berlin were at the cost structure of our other factories, it was on the order of 2,000 to 2,500 of headwinds. So I think from there you can back into margin impact of those factories as of end of Q4.
Thank you very much. And let's go to the next question from Pierre Ferragu from New Street Research. Pierre, please go ahead.
Thanks, Martin. Can you hear me well?
Yes.
Yeah. Excellent. Zach, I'd like to follow up on the data point you just gave on cost. If I look back at the COGS per car, you guys bottomed close to $36,000 in the middle of 2021. And then the number went up as you had to face with inflation in input costs and the ramp of Berlin and Texas. And this quarter, I think we are close to $40K, and we peaked maybe close to $42,000 at some point last year. And so my question from here is, how much time do you think it takes you to get back to this kind of 36K, which would mean, Berlin and Texas and like the input cost, all that stuff is normalizing? Is that and that would be like a kind of like a 10% decline in the COGS per car. Is that something we can hope to see this year, or is that too optimistic?
The Austin and Berlin ramp in efficiencies in 4680 will make a substantial amount of progress on that over the course of the year, and that's within Tesla's control. We're doing a lot of work on cost reduction outside of that. We talked about supply chain costs, expedites, logistics, attacking everything. On the raw materials and inflation side, where lithium is the large driver there, and this was a meaningful source of cost increase for us, we'll have to see where lithium prices go. And, we're not fully exposed to lithium prices, but I think in general, is what we've seen from our forecast here, cost per car of lithium in 2023 will be higher than 2022. So, that's a headwind that would have to be overcome to return back to those levels. So I don't think we'll get there this year, but I think we'll make progress. And we'll continue to find ways to offset these raw material costs that we don't have control over. And is there anything on that?
Yeah, like on the non-cells raw material, we begin to capture, benefits of indexes tapering off. But due to the length of various supply chains, it does take time before this is reflected in our financials. And while aluminum is down like 20% year over year, steel is about 30% down year over year. The global non-cells raw materials market continues to be influenced by geopolitical situations in Europe, high production costs due to labor cost increases and energy spikes, and disruptions due to natural disasters like typhoon in Korea 4 months ago, pandemic lockdowns. So we believe that meaningful price corrections will ultimately come, but it remains uncertain exactly when. In the meantime, we continue to redesign supply chain to make it more efficient and work with our supplier partners to find more efficiencies, streamline logistics and transportation to reduce costs.
Excellent, thank you. And I have a quick.
Sorry, you wanted to say something?
I was just going to say, we're also, our fleet is starting to mature, the 3Y fleet, and we're gathering a lot of data out of that fleet to understand how we can sort of bring some margin that we didn't know we had out of the product. So over the course of 2023 on the powertrain side, we're actually going to go after sort of some materials where we're paying for more performance than we need, or we have more content than we need without impacting reliability at all. And that will actually add up to a pretty significant cost reduction on the powertrain side over the course of 2023. So we're not just sort of relying on supply. We're also doing design actions to bring cost out.
Yeah, and my guess is if there is if the recession is a serious one, and I think it probably will be, but I hope it isn't. That would lead to meaningful decreases in almost all of our input costs. So I would expect to see deflation in our input costs most likely, which would then lead to better margins. I'm just guessing here. So this is, but that would be my guess.
Excellent. Thank you so much. So as a quick follow-up, Elon, I was thinking about like FSD, and when you look at like the situation today compared to a year ago, it's like the progress has been like amazing in the quality of the product, but also its rollout. And so I was wondering, how much is this like impacting the take rate of FSD today? So do you already see that people are getting more excited by FSD because they see it around them on 400,000 cars and they see the value of the service already? Or is that too early to really see like to expect like an uptick in the take rate?
The trend is very strong towards use of FSD. And as you allude to, with each incremental improvement, the enthusiasm obviously increases. I think something that still a lot of people out there don't quite appreciate is that Tesla, I've always said like Tesla is as much a software company as a hardware company, but Tesla is really one of the world's leading AI companies. This is kind of a big deal, both AI on the software side and on the hardware side. With the hardware 3 inference computer, still the most efficient inference computer in the world, despite being at this point 5 years old from the design point. And with hardware 4 coming, and then hardware 5 beyond that, where there are significant leaps. And the Dojo computer, we expect to be using that operationally at Tesla later this year. And we're seeing just a lot of world-class AI talent join the company. There's also the long-term potential of Optimus, where we're able to use our expertise in electric motors and power electronics, batteries, and advanced manufacturing to be able to make a humanoid robot that is actually useful and can be made at high volume with exceptional capabilities because of the autopilot AI that, where we take because the car is like a robot on 4 wheels and the Optimus is a robot on legs. But as we get closer and closer to solving real world AI, and we don't see anyone even close to us in achieving this, the value. Pierre, I think you appreciate this, and a few others do, but most don't know what I'm talking about. So, but this is the thing that has order of magnitude potential market cap improvement for Tesla.
Thank you. And the next question comes from Alex Potter from Piper Sandler.
Can you hear me, guys?
Yeah.
Yes.
Okay, great. So quick one on FSD. This, I guess, for Zach. Obviously, you unlocked some deferred revenue in the quarter that'll translate presumably into higher margins on every incremental sale going forward, so long as people opt in for FSD. But was wondering if you're able to disclose the percentage of the $15,000 price that you're not going to be able to recognize as revenue up front rather than deferred.
Yeah, I mean, the way that we've structured this is a full self-driving package is 2 components. There's enhanced autopilot, the price of which is listed on the website. We fully recognize that. Then there's an incremental, which is for the additional features that full self-driving offers. And we've released a portion of that. And then there's a minority of the total package that's remaining that will be released over time as software updates are there. And in our shareholder letter, in addition to disclosing the dollar amount of the deferred revenue release, we also included in there the dollar value of the balance of unreleased deferred revenue that will be released over time with future software updates.
Okay, great. And then maybe one additional question here on the incremental capacity in Nevada, the 4680s that you're planning. It's a lot of batteries, obviously, and presumably you won't be putting all of those in Tesla Semi. So I guess 2 questions about that incremental capacity. First, is it correct to assume that all of those 4680s are going to be more or less fungible and usable in your entire range of products? And if the answer is yes, then if you had to guess, how do you think that 100 gigawatt hours would be allocated between your various end markets?
Oh, this is a bit too much guessing at this point.
Yeah.
But
I mean, you're right. Not all of the 100 gigawatt hours are going to go into the semi trucks. That is correct. I mean, we can.
Let's say, like we I alluded to, a number of future products. Those future products would use the 4680.
Thank you. And the next question comes from George from Canaccord Research.
Hi, everyone. Thanks for taking my question. So you recently adjusted prices, and that may have put many of your competitors in the back foot. In addition to that, capital markets have recently gotten a lot tougher. So with those factors in mind, I'm curious how you see the current competitive landscape changing over the next few years and who you see as your chief competitors 5 years from now.
Well, 5 years. 5 years is a long time. I was with the Tesla Autopilot AI team until late last night, and we're just asking. I was just like, so who do we think is close to Tesla for a general solution for self-driving, and we still don't even know really who would even be a distant second. So yeah, it really seems like we're. I mean, right now, I don't think you could see second place with a telescope. So, or at least we can't. That won't last forever. So, in 5 years, I don't know. Probably somebody's figured it out. I don't think it's any of the car companies that we're aware of. But I'm just guessing that someone might figure it out eventually. So, yeah.
I mean, beyond that, Elon, like in the vehicle space, even though the market's shrinking, we're growing, and EVs have doubled almost year over year. So, like, whoever keeps up with the trend of EVs is going to be our competitor. And you know, the Chinese are scary. We always say that. But like, you know, a lot of people always look at the EV market share, but we always look at it as how much of the total vehicle space do we have, and we're just going to keep growing in that space. There's 95% for us to go get.
Yeah, and I don't want to say like I think we have a lot of respect for the car companies in China. They are the most competitive in the world. That is our experience, and the Chinese market is the most competitive. They work the hardest and they work the smartest. That's so a lot of respect for the China car companies that we're competing against. So if I were to guess, it would probably be some company out of China is the most likely, to be second, to Tesla. But we are the Tesla China team is winning in China. And I think we actually are able to attract the best talent in China. So hopefully that continues. So yeah, super fired up about the future, and yeah, well, it's going to be great.
Just as a follow-up, the Inflation Reduction Act has created huge tax incentives for commercial vehicles. You mentioned an incredibly interesting product pipeline. Are there maybe some plans to accelerate commercial vehicle form factors outside of the Tesla Semi to help accelerate EV adoption?
Well, I was basically saying that, yes, but I'm not going to give you details because this is nice try. Yeah, of course. So, we have to always look at like what is the limiting factor for new vehicles, because if for the longest time we've been constrained on total cell, lithium-ion production output, and so people said like, why not bring this other car to market or that other car to market? Well, it doesn't really help if all you're doing is shuffling around the batteries from one car to another. In fact, it hurts because you add complexity, but you don't add incremental volume. So it's sort of pointless. In fact, counterproductive to add model complexity without solving the availability of lithium-ion batteries. So as we get we want a new product introduction to match where the cells are available for that new product to use those cells without cannibalizing the cells of the other cars. That's the actual limiting factor for new models, not anything else really.
Thank you. Let's go to the next question. The next question comes from William Stein from Truist.
Great. Thanks for taking my question. Elon, you started to answer this earlier, but I like to ask this question about the AI elements of your business and ask if you could comment on progress around Dojo and Optimus and your anticipation for the likelihood, for example, for the company to disconnect the GPU cluster in favor of Dojo and to have some market achievement in Optimus?
Yeah, I mean, obviously, since we're still at the early stages, there are big error bars in any predictions. So it's like easy. I think easy to predict the long term, but hard to predict the time in between now and then. But we think Dojo will be competitive with the NVIDIA H1 at the end of this year, and then hopefully surpass it next year. The key there is like I think what's the energy usage required for a given amount of if you're training a frame of video, what's the energy cost required to do that training, and we think probably we said this already actually at AI Day 2, so it's not new information, but we do see potential for an order of magnitude improvement relative to GPU, what GPUs can do for Dojo, which is obviously very specialized for AI training. It's hyper specialized for AI training. So wouldn't be great for other things, but it should be extremely good for AI training. So just like if you do an ASIC for something, it's going to be better than a CPU. This is sort of in some ways like a giant ASIC, and we're able to. Since we're operating one of the biggest GPU clusters in the world already, we've got a good sense of how efficient the GPU clusters operate and what Dojo needs to do in order to be competitive. But we think that it does have a fundamental architectural advantage because it's designed not to be the GPU is trying to do many things for many people. They're trying to do graphics, video games. It's doing crypto mining. It's doing a lot of things. Dojo is doing one thing, and that is training. And we're also optimizing the low-level software so that it at a very sort of bare metal level. So it's just insanely good at efficient training. And the intercommunication between the Dojo modules is extremely high. You're not going across an Ethernet cable. It's like so. Anyway, we see a path to an order of magnitude improvement in the energy efficiency per given unit of training. But we also have to achieve that, and so that when will it be achieved? It's hard to say, but we do see a path to get there. And then also in inference, like once you've got something trained, well, if you want to have a product, that's a consequence of that training, and that product may not be anything to do with cars, then the efficiency of inference is extremely important. And we also have by far the most efficient inference computer with the FSD computer in the car. This has potential for products that aren't even really in automotive.
Thank you. And William, do you have a follow-up?
Yeah, it sounds like the 1.8 million units you expect this year is supply, not demand limited supply. It sounds like by the lithium batteries. If you were to become demand limited, can you talk to us about your propensity to use price and your relatively high industry margins to grow units and share?
Yeah. To be clear, the 1.8 million is not cell supply limited. We did address that number earlier in the call. If you want to answer.
Yeah, it's roughly, a cell supply is roughly matched with that. And this is 1.8 million cars. If we get lucky, it could be more. And then the rest would go into stationary storage, the Powerwall and Megapack. So, yeah, so.
Okay, let's have the final question from Adam Jonas.
Hi, Elon. First question is it time for Tesla to significantly expand the captive FinCo? I mean, you only have like $4.5 billion of these receivables. It's basically nothing compared to other big auto companies. Then I have a follow-up.
Zach, maybe let's press to answer that.
Yeah.
Yeah, I mean, the way that we've been using captive financing so far is to plug what we believe to be gaps in the market of existing third-party products. And so we have a couple of offerings in Europe. We do loans for our energy business, retail energy business here in the US. We do leasing, and we do a small amount of US loans that are very targeted. And so we're using captives to support market gaps, as I mentioned. So basically as a vehicle to support vehicle sales, make sure customers have access. I do think there's opportunity here to continue to grow this. We are growing it slowly here. It is a consumer of cash, so we're being cautious on how we do that. But you know, the plumbing is in place to do a lot more here. And I think we'll have to see how things unfold over the course of the year and make decisions real time as to how much we ramp it up versus ramp it back.
I think if we see a severe recession this year, which, like I said, hopefully we don't, in severe recessions, cash is king big time because it's in such short supply. So we want to be cautious about using cash for loans and that sort of thing for cars. You know, I feel we're in a very strong position to get through a recession because we really don't have any debt, and we've got over $20 billion of cash, which is great. Actually, the cash is earning a ridiculous return, not a good return. So it's like non-trivial. The interest rate actually means the 20 billion is earning like quite a good amount. And I've made this point on Twitter a few times, and I'm sure a lot of people on this call understand the basic value of a security is a function of the risk-free rate, or we'll see how risk-free it really is, but of the T-bill rate. So if you've got, I think if I recall correctly, the S&P 500 has a long-term rate of return of roughly 6%. And so I think the Fed needs to be very cautious about having a Fed rate that potentially exceeds 6%. If we see deflation, and I think we are seeing deflation, then you would add the deflation number to the in quotes risk-free rate from the Fed, and as that starts to exceed 6%, now you're starting to exceed the long-term return of the S&P 500, and starts to become questionable as to why not just put your money in T-bills or a savings account essentially instead of in the S&P 500 if the S&P 500 is variable and the bank interest rate is not. This is so basically the Fed is at risk of crushing the value of all equities. This is quite a serious danger.
Thanks, Elon. And just a follow-up. I don't want to steal thunder from March 1st down in Austin, but how close are we to that step change improvement in BOM cost where you could sell an EV for under 25 or 30,000 bucks and actually generate a profit? That kind of real moving assembly line moment in manufacturing. Again, don't want to steal the thunder, but just if you wanted to kind of wrap up with thoughts there, that'd be helpful.
Oh, man.
Thanks, Elon.
I mean, I'd love to answer. If I were you, I'd probably be asking the same question, but we would be jumping the gun on future announcements.
Fantastic. Thank you very much, everyone, for all your good questions, and we will see you again in 3 months' time.
Thank you.
Thank you. Bye-bye.
Okay.
Well.
Well done for the typing. Well done for the typing. You were on a roll.
My hands are tired. It's those World of Warcraft fingers, man.
I mean, the last one, Adam Jonas. How naughty was that, right? Obviously, he knows something, and then
yeah, that was there's a lot to chew on there. I think the biggest thing we got in the first paragraph of the earnings call, and that was we're not demand constrained. Demand is 2 times our current production year to date. We are the 1.8 is not supply. It is not really us worrying about that we can hit 2. That's a big one. And then the 4680 answer I didn't love, but Farzad, why don't you go through what you wanted to go through?
No, I mean, I got to format this and make sure it's digestible for people. So I mean, you can if you want to keep riffing, you can. Yeah, I mean,
you're sharing this. You're sharing this on Google Sheets. Is that how it works?
Yeah. So I'm gonna put it in the comments section. Make sure everybody has access to it. I'm gonna share it on Twitter. I mean, there was a lot here, y'all. There was a lot here. I thought. I mean, it was very I didn't really hear anything that would be construed as like too negative. There was one bit in here that they said they're still confident that they're going to be above 20% margins and the ASP about 47,000, and that, you know, demand is not really a problem. And even in the case of a recession, they're still going to be able to grow the business. They have a good cash balance. So they were really hyping up just how well positioned they are in the call. Was that the kind of vibe you guys were getting as well? I mean, and we can use this to kind of go down. It's up to you guys how you want to review it, but that was my takeaway. What do you guys think?
I mean,
I agree. I mean, it was. Go ahead.
No. I mean, honestly, I didn't find so much of new information. I like the details on insurance. I like the details that they may start financing prudently. I love that one. So there were some rather minor but new announcements. But obviously, the most exciting was Elon. Like, oh, we have so many other products. We even have some that, you know, we won't be able to consider because we have so many of them, but there's a lot coming. And then this Adam Jonas thing saying, when will you get to the moment that you can produce an under $30,000 car and still make a profit? And then Elon obviously telling him off for having said that. The other one moment that I really kept in the mind was that, yeah, we're signaling 1.8, but we're going for 2 million cars this year.
Yeah, completely. When he just sandbagged himself. When he unsandbagged himself, he unbagged himself. Yeah.
So that were my big ones.
Josh.
Yeah, I already said my big ones. I think the biggest thing is the demand. I mean, just point people back to specifically what management guided there around demand and it being way higher than production. And then towards the end of saying we're not worried about batteries either with that 2 million, like that, you know, that's not really I think they said that. They said the 4680s are not going to be, or maybe they just said battery. I'm gonna have to go back and listen or read your notes, but that the batteries aren't going to be constraining them either. So I think those go hand in hand, and that's all really I was looking for this call.
Okay. Matt?
Yeah, I mean, all those same points. Just being the finance nerd that I am, though, I really liked the kind of confirmation that the gross margin and the ASPs would be higher than what they said. And I was actually surprised that Zach guided a little bit on the credits. What was it, 300 million per quarter, something like that? I forget the exact amount.
Let me pull this up.
So that was, I did not expect him to give, you know, as much detail from their own internal forecast as they actually gave us here. So
yeah,
okay.
Trying to find
the operating margin above, I think it was 17%, and the gross margins above 20%. And the fact that they're just trying to optimize for operating margin, and even now when they're, you know, facing a little bit more, you know, financial stress than they faced in a while, he's still talking about kind of optimizing for operating leverage. I mean, operating leverage was like the buzzword in 2020, and it's nice that they're still actually focusing on that.
Yeah,
so 150 to 250 million.
And Matt, I think you also probably liked when Zach said the headwinds from Berlin and Austin are about $2,500 on the COGS. So that was nice.
Trying to find that. There was somewhere
sure.
in the middle of the script. should I quickly go through the notes here and then see if there's any commentary that you guys want to provide us?
Please do.
Okay.
And if you remember, because I didn't grab all the names, so it was Zach responding, it was Drew responding, but then there were also two other people, right? Did you notice
one of them
that
was Karn? Yeah. So one of them was Karn, I believe. He's the supply chain head. That was the org I used to report to when I worked there. I believe that was Karn, but he's supply chain. And then the other one, I think that was just three. I think it was Drew, Zach, and Karn that were mostly responding to stuff, I think. But yeah, so let me go ahead and recap. So fantastic year, more than 1.3 million cars, 17% operating margins, 12.5 billion net income. I mean, a lot of this I think we already know. We could probably skip a lot of this, which is just a recap of the deck that we're just kind of
just want to add, he obviously had his notes because he was really sticking to it, and I think that was very good of him.
He could barely say statistical. There was one word he was stuck on. I remember that. That was pretty funny to listen to.
It took him like 10 seconds. It was no small struggle there.
It was working hard.
We've all been there.
Yeah, for real. Let's see what else.
I said I sleep with my kids.
I think I'm just gonna go into what. It's all good. Yeah. So Zach kind of had comments around progress on overhead efficiencies. So non-GAAP OPEX improved. Sequential margin impacted by COVID and consumer price credits and rising interest rates. The rising interest rates increased the price of cars, by 10%. And the cost per unit, raw material inflation, in-house ramp of 4680, and shift has been going to Model Y, which I guess is the higher cost cars, some of the impacts that they had from a cost perspective. Storage is growing, good trajectory to improve costs, aggressively leveraging costs to from a demand perspective, trying to customer interest remains high, cost reduction holding steady on rapidly increasing volume, on improving overhead efficiency. They're moving from inflation to deflation. Strong partnerships with suppliers important in this case to really make sure they capitalize on the shift. They're prioritizing funding of the expansion of in-house production. Cybertruck coming to market. Model 2, which is, call it the compact car. I called it Model 2 because I just needed something to type quickly. Manufacturing footprint, energy footprint, and then more on Investor Day 3.1. Before I go into questions, did you guys want to highlight anything from the sort of the preamble? Anything you guys wanted to say? No. They started getting into the questions. Order trends, is there a problem? No, demand far exceeds production. So that was kind of the comment that we saw. There was something Elon said, actually, specifically. Thus far in January, strongest orders year to date than ever in our history. Orders almost 2x the rate of production at current pace. Raised Model Y price in response to this. Demand will be good despite probably contraction in auto market as a whole. Price really matters. Vast number of people that want to buy a Tesla car that can't afford it. Price changes really make a difference for average consumer. Affordability is very important. Always Tesla's goal to be affordable to as many people as possible. Elon is glad this is the case. So, this is an open. He's said this already in the Twitter space, but it's basically like, y'all, we're gonna go for maximizing capacity here. So that was my biggest takeaway from that.
So, in my little envelope math is, they can produce about 5,000 cars a day, and so they have orders of 10,000 cars a day. Is that how you interpret that?
That's how I interpret that. Yeah.
Okay.
And it'll probably level off. We'll probably come back down at some point. And if it doesn't, then that's a whole different. That's a whole different chaotic scenario.
Yeah.
Let's see. So it was a question about demand. No problem. What is the initial reaction to price reductions? Good. Will Tesla be able to take full advantage of the EV tax credits at $45 per kilowatt hour? So this was the one thing that Matt wanted to know, and Yasha, you brought up. Long-term expected value of these credits would be very significant, anywhere near 1,000 gigawatt hours of per year. It's a big number. So if you times that by the 45, you can see that's pretty large. Relies on domestic manufacturing. Yep, very good. Good math. Relies on domestic manufacturing, splitting it with Panasonic. So the current domestic they have, they're splitting it with Panasonic, which is a bit of information I don't think we had before. No. I think that's new. Value of credits in 2023 will not be gigantic, but it probably will be in the future. Different products will get different amounts of credits. Regulations are still changing, but for 2023, they're expecting somewhere between $150 to $250 million per quarter of these credits impacting their bottom line, growing year over year. So like rec credits right now from selling cars is like what, somewhere between 250 to 450 per quarter. So now you're going to layer on another 150 to 250. So
yeah, and if I could just add, like,
way of thinking about that.
The people have been kind of excluding reg credits. We always hear automotive gross margin excluding credits. You know, you assume that those are going to wind down eventually. That's always been the assumption for bulls and bears alike. This is the opposite. It's starting small, but it's going to get bigger over time. So ignore it at your own peril, because it's a very real benefit that will become more meaningful over time.
Good point.
Great point. Very, very good point. Working to move more manufacturing onshore to the U.S. That was Tesla's plan anyway, and that's the incentive of the credits. Pretty well positioned to do this. Goal is to improve adoption from customers as well. One, to improve affordability. They want consumers to get the benefit from the $7,500 tax credit, EV tax credit from the IRA, as well as the lower costs. So that they're looking to pass this on to consumers. Tesla wants to go as fast as humanly possible through prices, and essentially lower the price, lower the cost, so they can lower the price and get Teslas into as many hands as humanly possible. And then, okay, any comments there before I go to the next one? No? Okay. After recent price cuts, analysts think less than 20% margins, ASPs of about 47,000. Where do you see it? Zach says lots of uncertainty how the year will unfold, but above on both of the metrics, so above 20% margin and above $47,000 ASP. ASP reduction is not as large as the price configurator prices. Management team most focused on operating margin, so that should be a new way of kind of thinking about it. Don't think about it from a car perspective, but a whole operating margin perspective. As other areas of the business grow, like energy, and heavily focus on operating leverage, the right metric is operating margin, which to me is signaling to bigger growth in the rest of the business. I think that's the kind of message I got from that statement. Then Elon said, every time Tesla sells a car, it has the ability of generating software revenue, tremendous upside potential. Only small percentage of cars don't have hardware 3. It can be sold at 100% gross margin. Value grows as autonomy capability grows. Biggest value asset increase of anything in history. Usual Elon speak, LOL. Any comments there from anybody? I think that one's pretty self-explanatory. Political tweets from Elon. This one was a disaster. Is this impacting demand? How's favorability? Elon, I have 127 million followers, bro. And it continues to grow. I am basically
wait. You forgot. Let me check.
Oh yeah. Let me check my Twitter real quick. His tone was hilarious. I mean, he was Anyway, I suggest that Elon is reasonably popular. Maybe not popular with some people, but with majority of people, it speaks for itself. Twitter is an incredibly powerful tool to grow demand for Tesla. Is doing a sales pitch for Twitter. He spent 10 to 30 seconds selling Twitter on a Tesla earnings call, which I thought was kind of genius, but I'm sure Tesla investors weren't happy about that. Some of them. Net value of Twitter is gigantic, and so it kind of brushed aside this question and basically says no issue is kind of what I took away from it. Was like, hey, look at me. I'm still the most popular guy in the world. Yeah. Are there upset people from my political tweets? Yes. Is it a net negative? No. Can we move on? Just let me express myself the way I want to. That was my takeaway. Would you guys agree?
Mm-hmm. Yeah. He probably gave more fodder for his enemies just with that. You know, they'll say he's egotistical, whatever. Compare him to Trump. Yes. Like, nobody's more popular than me. Everybody loves me on Twitter. I'm the most popular. So, I'm sure there'll be some bad takes, and it probably didn't help anything. But it was interesting.
If there's anything I learned about my sort of growth in the space is like, just because somebody follows you doesn't mean they like you. Some people will follow you to just crap on you. So Elon might be using some incorrect data and assuming some things that are not true, which is weird. But that's a whole different discussion. That's exactly. So you can shut on me the whole time. Oh, poop on me. Sorry for any kids watching. My apology. I'm trying to curse less on these things, by the way, making an actual concerted effort to do that. So please bear with me. Thank you very much. So they asked, please provide a 4680 production ramp. Drew congratulates the team for reaching 1,000 batteries per week in Q4 in Texas. 1 of 4 lines is in production right now. The 2023 goal is cost-effective ramp ahead of Cybertruck. Improving quality and yield will set up for a major 46 year in 2024. It was kind of wishy-washy, not a lot of details. Hey, we're still growing. Just we'll get there. So that was my takeaway from that answer. Would you guys agree? Did you hear anything from the 4680? Just kind of sandbaggy-ish.
It seemed like Drew was kind of intentionally avoiding talking about how fast it could ramp. So that didn't instill a lot of confidence, to be honest. I mean, when I was just judging by just the tone of the answers around 4680 ramp. But the fact that they said they're not really a concern for them hitting their 1.8 to 2, that's all I kind of needed to hear for now. But it wasn't confidence instilling around the 4680s fully for me.
Yeah. Good. Anybody else? No? FSD Hardware 4 will come in Cybertruck. Is this the plan? Upgrade path. Cybertruck will have Hardware 4. 2023 Cybertruck will not be a significant contributor to the bottom line, but will be in 2024. It's an incredible product. It will be the car drives that Elon drives. Car that Elon drives every day. One of those products that comes along once in a while. Upgrade from hardware 3 to hardware 4 probably not needed. Hardware 3 will exceed safety of average human. There will be continued improvement in hardware. Most important is improving average safety on the road. Cost and difficulty of upgrading hardware 3 to hardware 4 will not be feasible. Which that was a very interesting data point that says that hardware 4 is probably going to involve not just cameras, but like harnesses and other things that are part of the chassis that are not just like plug and play. I don't know. This one had me a little bit sour.
Well, me not, because what I liked is that he actually quantified it. Hardware 3, which is what we currently all drive, is still at a 200% level compared to humans, and hardware 4, I think the number was 500, right? So obviously it's wonderful to be 500 times more safe than a human, but I think we'll just have to live with the fact that there are millions of cars out there now that are on hardware 3, and that's going to be good for a long time until other cars have hardware 4. I don't think that's a real problem. I mean, we're obviously very spoiled as Tesla users because we get all these over-the-air updates, and we want the most updated car all the time. But I mean, any normal car maker deals with this on a daily and yearly basis. So I think we can just all live with hardware 3 the way it is. Seems to be extraordinary already.
I do wonder though if this signals that hardware 3 will not be ready to be like robotaxi. That like if people are buying the car envisioning adding this to the Tesla network to make money. That's
true. I didn't think of that. Yeah, that's true.
Yeah, there might be a gap there. That's kind of feeling I'm getting.
I really like where you guys' thoughts are on this. The one thing that stuck out to me though was when he said that, I was like, oh, he's not even driving it yet. You know, it was like if we were expecting Cybertruck, let's say, you know, like Farzad, I've always said July 1, right? You know, Canada Day or July 4th weekend is kind of been an expectation. It seems like, you know, Elon should probably be close to using this car every day already. I mean, he's traveling all the time, but he's saying it in the future tense. So it's like, how close are we really for the first few deliveries if we're not even at that point yet where he's publicly driving it months? You'd imagine it'd be a couple months prior to the first deliveries coming out. So I think we're in for the end of the year now for the expectation here.
I agree with you, and I don't think it was at that moment. It was a little bit later down where he clearly said this year will be insignificant, which is different from what we heard before. I think it was lower down, but before it was like second half and then it will ramp, right? So people had between, I don't know, 20 and 100,000 for this year in their models. That doesn't sound, oh yeah, there it is, you're right. That doesn't sound as if it's going to be that many this year. I think it's late and not so many.
Yeah, it sounds like 1,000 Cybertrucks this year.
Now we're really putting it down.
Yeah,
but
maybe
it sounds
5,000.
really
Yeah, maybe 5,000, right? Okay. Anything else on that point? This one, I just my gut tells me that this one's going to be controversial. It's going to be controversial because better than an average human doesn't seem like better than an average human is not good enough to be a robotaxi. And so I think
200% is not bad. I mean, it depends on what average human you take, obviously, but 200% doesn't sound. Yeah. I mean, you're driving FSD now, and you feel fairly safe in it. It's much. Right?
I mean, I feel very safe, but I do wonder if regulators are going to be comfortable with turning it on. Like, if it's 2x better than a human, and the regulators say it needs to be 10x better than a human, right? And hardware 3 will never get you there. Like how when people buy full self-driving for their cars, are they buying it thinking that they're going to be able to add this thing to the fleet, right? And if that's not the case, then are they going to have something in their hands in 5 years' time that says, well, this car you bought actually can't because the retrofit is going to be, the retrofit's going to be $10,000 or something. I don't know. But again, if it's going to make them $100,000 in 5 years, maybe who cares? It'll be like, okay, well, screw it, I'll do it. So perhaps it just becomes a math equation. Anyway, I have to think through it more.
And I do believe there is a big part in those numbers that are actually not quantifiable. I don't think you can live with something saying it's 5 times safer. I mean, I understand you get to 99.9% of safety, but for a person to feel 5 times safer, I don't think you can quantify it as 5 times safer, right? You can quantify it 5 times faster, but 5 times safer belongs really to everybody's safety needs, right? And so I think that's a very difficult path to quantify.
Yeah, it's fair enough.
I had the same thought as you, though, Farzad, just in listening to the way that he was describing about that. It was not your Model Y will be able to make you money. It will be safer. So, I think the kind of huge increase in asset value that he talked about, that was originally kind of pitched as a robo-taxi, but now it might just be that you get more utility from your car because maybe you can, on highways, you can like watch a movie or check emails or something like that. But
that's
definitely, I think the goalposts have moved for hardware 3.
That's the vibe I'm getting. Yeah. Which I think will make many, I don't think it's going to, for the long-term success of the company, I don't think it's a big deal, but I do think it might be like a sticking point for some folks that say, here goes Elon again, sort of, being a fraudster, lying about, and I'm not saying he is. That's not what I'm saying. All I'm saying is that just the way that was worded was a little bit like, okay, I see a risk here, but it's not significant. I just know it's a risk. Potentially, I could be wrong.
Yeah, and there could be a lawsuit, but the thing that I think some people have gotten confused on in the past is like they've never promised that when you buy FSD, it'll enable a robo-taxi. They've promised that it will recognize stop signs and follow traffic rules on city streets and that sort of thing. So it doesn't have to hit autonomy in order for them to like avoid lawsuits or that.
100%, 100%, yeah, 100%. And again, I'm not saying, listen, I'm like saying it as if I know how to do this. I have no freaking idea how to solve this. Like the fact that they're trying is incredible. All I'm saying is that there might be a risk in what they said and what it's going to do. That's all I said. And I got to go back and restudy it, but that's all I'm saying. So, okay. Tesla insurance, big enough revenue source to list on statements? ? Zach says, probably going to take some time for specific financial disclosures. 300 million annual premium run rate as of end of 2022, growing 20% per quarter, faster than growth in vehicle business. States in operation, 17% of customers are using Tesla insurance. Number continues to go up. Most of adoption is at point when they purchased the car. It was to improve the total cost of ownership of Tesla cars due to high premiums from third-party companies. Want to make sure costs remain low. And then Elon mentioned 2 side benefits. By offering insurance at a competitive rate, it makes other car insurance companies offer better rates, improves total cost of ownership, even if not using Tesla insurance, have to compete with Tesla. Good feedback loop into minimizing cost of repair of all Teslas worldwide. Want to minimize the cost of repair at Tesla because it'll help with finances. Adjust its design of the car and software to minimize the cost of repair. Most accidents are small, broken fenders, scratches, etc. Solving how to get someone's car fixed quickly and efficiently because of these like data sets they're getting from insurance, which is kind of freaking awesome, to be completely honest. Small changes in design of bumper and improving logistics of spare parts make a huge impact. Anything there? Insurance is small, it's growing, still not big enough. That's kind of what I got out of it.
Mm-hmm.
Yeah, that's kind of in line with my expectations. There's been some people who've been super optimistic on insurance, but to me, this has been kind of what I was expecting.
Yeah.
Yeah.
Is Cybertruck still on track for mid-year 2023? We expect it to start sometime this summer. Excuse me. Downplaying start of production, always very slow. Volume production starts in 2024. Started equipment installation in Austin. Beta vehicles are built. Ramp will start in 2024. So just kind of like talking more about what they were saying earlier in the call. Yeah.
Pushing it up.
Yep. Lowering, just maybe setting a realistic expectation. With near infinite demand of storage, how many factories are needed? Elon says, not ready to announce, but will provide an update in the future. Thinking about it very carefully. What is the fastest path to 1,000 gigawatt hours per year rate of production? You'll see announcements come out this year and next that will answer this question. So it may start with Investor Day. We'll see. Okay. Anything else before we go into the analyst questions? No? All right. Rod Latch from Wolf Research. 1.8 million volume for 2023, somewhat more supply constrained. Is it inaccurate? And later in the call, they said it's not really a supply constraint. Is that what they think 1.8 million would be? And this is where freaking Elon sandbagged himself. 1.8 million. Literally, the first question is like, it's 2 million. 1.8 million for 2023 is somewhat more supply constrained. Is it inaccurate? Elon, our internal production potential is closer to 2 million, but we were saying 1.8 because there's always some weird thing that will make us go slower. That's my word. They said like force majeure and stuff. Those are my words. Potential to be 2 million cars in 2023. Yeah.
And I mean, he said clearly, I'm not committing to the 2 million. He wants that 1.8 being the number that's out there, which is clever, much more clever than saying we're doing 2 million, much more clever.
Yeah. But not everybody's going to make it 2 million, right? The street is not going to, you don't think so? Okay. We'll see.
I think we can probably live with 1.8 for the moment and just repeat 1.8 endlessly.
Yeah.
Yeah.
I'm going to put 1.9 in my model.
just to be contrarian, right, Matt? There we are.
Yes.
Well, no, you split the difference. Like you want to try to get the middle of the road estimate, and if 2 million is if everything goes well, and 1.8 is assuming it doesn't, then split the difference. That's probably I'm
gonna go 2-1.
A P50 probability of getting it right.
I'm gonna go 2-1, y'all. All right. Next thing here is
Yaman.
Oops, what did I do here? Yeah, Yaman it up, son. Cost side way down by 4680 ramp, Berlin, Austin. Can you give us headwind absorption? Can we tease out interesting data points where battery costs are headed due to Nevada? If correct, investment costs could be half of where it's been anywhere else. We don't want to say the specific number, but interesting at seeing the size of Giga Nevada that is a small fraction of the space that currently makes 35 gigawatt hours out of their other facility, or the same facility but in a different space. Basically saying that we're making more with less footprint, which kind of implies very good density of production versus square footage, which is what Tesla's extremely good at from a manufacturing perspective.
Dry battery electrode in particular with this application. That's what came to my mind.
100%. Couldn't agree more.
Yeah, we're moving from the workshop to something serious now.
Yeah. It's going to be fascinating to watch that ramp. Goal is to do more batteries in a smaller square footage. Biggest competitive advantage of Tesla is to be damn good at manufacturing. If you're good at manufacturing, you can apply it to many things. Tesla has other products in development. Not going to announce them, but they're very exciting, like wind turbines. We have more great ideas that we know what to do with. There will be bumps along the way, and it will be a difficult recession in 2023. Probably, not sure. Elon, his usual speak. But one can't predict the long-term stock value because when there's a recession, then people panic. Long-term, Elon is convinced that Tesla will be the most valuable company on earth. But for cost-wet headwinds on Q4, which was the original question, the weighted average is about $2,500 of COGS impact from those variables. Any comments there?
So for the new products, I want to have your first thought. I mean, I know Farzad is on wind turbines, so we're going to nail you down on those. Matt and Yashu, what do you think?
I actually think he's referencing the compact car, to be completely honest.
I actually thought it was the van. Yeah, I thought it was the van.
Me too. Me too. And since we're always right, Yashu and me, that's it.
It's true. The minivan, come on. Who's not going to buy that?
Yeah. And I mean, it will have a commercial use. It will have a commercial use, and it will have a normal retail client use.
Yeah.
Matt, you need a van, right?
Yeah, I for years I've been requesting an 8-passenger full-size SUV or big van because my family can't fit in any EV out there. So 6 kids and 2 adults, we need something bigger.
Look at this headline, by the way, from Reuters.
Right away.
Yeah. The 1.8 forget.
Look at the ad on the side too. Click on the ad.
Should we click on it? Should we click on it?
Yeah. Let's see where it goes. How are they optimized?
Make them pay.
You just cost them $1. Come on, man.
Exactly.
Ford F Series.
Should we buy a Mach-E online? Should we do one?
A Mustang Mach-E.
You know how live streamers buy stuff live? Forget it. Anyway, sorry, Matt. I didn't mean to interrupt you. I just thought somebody saw the comment and I'm like, of course.
Cars on B.
Go ahead, Matt.
Was this was it a different question where he said that they can release like their kind of software dojo kind of stuff on other product applications, or was that this question?
Yeah, it was one of the last ones.
Okay, because I think
here.
with that one, I started thinking like that doesn't sound like just another car, like the van or the semi. So I was wondering, like HVAC and the VTOL plane were the two things that kind of came to my mind off the bat. Which I've given both of those like approximately zero thought in the last year. But so it's kind of interesting that they're starting to get stuff in the skunk works again. So. But yeah, I think in the short term, it's like it's going to be like the robo taxi vehicle. That seems to be very clearly something that that they're working on, and then maybe some other form factor. Like Elon even mentioned the minivan before, so maybe that's it.
Yeah, but these feel way out. I mean, until they get the battery production to where it needs to be. I mean, none of these are real. I mean, they can barely get the Cybertruck out this year. So like a compact car, we know for a fact is going to be the next one. So that's probably going to be 2024, 2025. And that one's going to eat up God knows how many batteries because, everybody's going to want that thing. So like when do we realistically expect a van or anything else? It's probably going to be like 2026, 2027, right?
Yeah.
So realistically speaking.
I mean, just look at the lag from Cybertruck announcement to 2024 is going to be the volume production year. You're talking about 5 years now. So like, I think whenever we hear something, maybe it'll be 4 years or something like that, because it's going to take some time.
Yeah. Look at us being all realistic. Don't call us hyperboles, y'all. Come on now. Just call me a hyperbole. Let's see.
You're a wind turbine maxi.
Where was I with this? Yeah, I'm a what?
You're a wind turbine maxi.
Wait,
okay. Wind
I can't help to. I can't help
maximalist?
I have to ask. I have to ask. Is this a Canadian thing? We call it wind turbine.
Yeah, so I've heard it both ways. When a lot of the guys in Texas call them turbines, so I think I kind of inherited that. But it sounds like the thing that you wear on your head.
You better watch it. I'm about to get you. I'm about to get you banned.
I thought it was just the accent. Farzad's going to cancel you.
No, I've heard it both ways, but most people that I worked with called them turbines. But turbine is probably the more accurate pronunciation.
Keep going, Matt. Keep going. That's all right. I won't cancel you. Don't worry, bro. You got two brown guys on the live stream.
It's better than windmills.
Fair enough. No, I'm just smacking. Well, I love Matt. He's my boy.
But you did think it was windmill, right, Farzad, this morning?
I did. Until I actually typed. Okay, let's move on. Pierre Figaro or Ferragu, whatever.
Ferragu. Let's do it. And it's 2 hours at the Pierre.
Farzad.
Hold on, we have a very special guest. Let's see if we can get him. Oh, Pierre Ferragu.
And it's 2 hours at the Pierre. Ferragu.
You'll
get there.
Pierre. What? Say it one more time.
Pierre Ferragu.
Pierre Ferragu.
Farzad, my patience is wearing thin.
Whose patience?
My patience is wearing thin.
Why?
Because you're insulting us Canadians over here with our French.
He is, right?
Wind turbine.
He is.
Listen, whatever. We have Gary in the background, but he's missing. Gary, if you can hear me, we can't see you, and I don't know if we can hear you.
You know what, Farzad? I sent him my link. Maybe you want to send. That's why I was off for half a minute. Maybe you want to send the real one.
Let me try.
The links are the same. The links are the same.
They are? Okay, I don't know StreamYard.
Yeah, they're the same.
You want to send it to him by email? I'll let him know that it's coming by email.
Yeah, I can send it to him by email. For those that just joined us, Gary Black will be joining us here once we figure out how to get him in here. Let's see. Stream link. There we go. All right, I just sent it to him. All right, he's going to try.
Should we finish up this sheet?
Yeah. So Pierre Ferragu, COGS per car close to 36,000 in middle of 2021, peaked at 42,000 in 2022. How much time does it get to get back to 36,000? Could we see this in 2023? Austin, Berlin, 4680 cost inefficiencies. Tesla will make big improvements on this in 2023. Raw materials and inflation. This was a meaningful source of cost increases. Need to see where lithium prices go. What? I don't know what I meant to write here. Something per car of lithium in 2020. Cost maybe. Cost per car of lithium in 2023 will be higher than 2022. Headwind needs to be overcome to return back to 36,000 in 2023. Tesla will make progress. We continue to find ways to offset those cost increases. There are some improvements in the supply chain that need to work its way through the system, like energy spikes, war, natural disasters, pandemic lockdowns, were some of the things that impacted those increases. So the decreases need time to work through the system. Meaningful price corrections will ultimately come, but uncertain when. Continue to redesign supply chain to be more efficient and streamline logistics transportation to reduce costs. Fleet is starting to mature in the 3 and Y, and they're gathering feedback to bring out margin from those improvements. After materials in the drivetrain, let me see, to take costs down, there's design actions and improvements in supply. If there's a serious recession, probably will be, according to Elon, that would lead to meaningful decreases to all of Tesla's input costs. Expect to see deflation in input costs, which would lead to better margin. We just got Gary as well. So let me should we pause on the notes and get Gary's reaction? What do you guys think? Because I think Gary's reaction is the most important by far. Gary, what's up, brother? How you doing?
Hey, man. Feeling good. Feeling good.
Tell us, what are you thinking?
So this is volumes, and you know what the street's going to have to realize. And I think there was a couple of ahas in the conference call because the numbers themselves weren't spectacular. They were kind of ho-hum when you back out the one-time deferred revenue recognition and a low tax rate. So I was like, okay, well, the gross margin was 24 and people look for 26. So I thought, you know, at best the stock might be flat. But then, you know, the conference call, what they told people was that the orders for January were about twice what the production was. That's huge. And, you know, when they were talking about their guidance for the year, which I didn't think they were going to guide, they stuck to the 50% long-term production growth, which I didn't think they would do that. And then they, you know, Elon started hinting, well, we actually could even do 2 million, which again, if you try to do the math, you don't get anywhere near 2 million based on what they're saying. So I think what people are going to come away with is that they're pretty confident that their price cuts are working. And I think what you have to see the street do is, you know, take the volume estimates up. But, you know, the gross margin numbers for me, they were much lower than I thought they'd be. So I'm probably going to wind up taking my estimates down a little bit just because I got to bring gross margins down some more. And I see Matt in there. I don't know what, Matt, your thought was because you kind of think like I do analytically about it.
Yeah, I mean, I was before you jumped on, I mentioned those two things about being a potentially soft, you know, Q4 number that you back off, and on top of that, they had higher credits than usual. So you gotta kind of back those out too. And when you do all that, then the gross margin looks a lot worse actually. So yeah, my numbers are definitely going to be coming down. So that'll, you know, I'm going to have to kind of hit the books on that. But I did agree with you, Gary. It's the numbers themselves were not spectacular, and they didn't necessarily guide that COGS was going to be, you know, decreasing in a very meaningful way going forward. The one thing that was helpful, I thought, was just that they affirmed over 20% gross margins for the foreseeable future. Right. So they'll be down, but they're not going to be, you know, catastrophic.
Well, nobody thought the gross margins would be in the 20s. I mean, if you look at the IR compiled consensus, I think the street was looking for 23. And if I take my numbers down to say 23, I'm down to about 480 in earnings, but the street is below 450. And, you know, you got to put this calculus together that, you know, volume should go up, but margins, gross margins should go down. And I think at the end of the day, you will see some street numbers go down because the quality of the earnings was not great. So I'm surprised the stock's up, but they were so confident on the call about volumes, unless they're not telling the truth. You know, it came off as a pretty good call. I mean, my partner said to me, you know, he saved it because the numbers were not anything to write home about, but he was so confident about volumes that I think everybody said, wow, that must be pretty good if they actually think there's a chance they could get 2 million in volume in 2023. Because I don't have a number anywhere close to that. I know the street's at like 185. I mean, everything about the actual earnings release itself was kind of mediocre to even slightly negative. But, you know, the conference call was really good, even though Elon, you know, stumbled around a little bit.
When is the last time we saw an earnings release kind of give a ho-hum after hours results, and then the conference call actually boosts the stock price? I can't remember the last time that's happened.
Yeah, usually it's the opposite. You know, Elon has a way of, and look, he went down this path of the Fed's raising rates and interest rates are going higher. And even though I don't agree with him that that's really why the stock was down in the fourth quarter, but that's his view, and he's sticking to it. So I just thought they did a good job of keeping people pretty optimistic about that the price cuts are working, and to Matt's point, they didn't have to say that ASP is going to be 47 or higher and that gross margins are going to be up 20. That didn't really add much, but I think just hearing them say it made people feel better. And like even with Megapacks, they didn't really go much into detail. You could see that there's some optimism there, but you didn't see it in the fourth quarter numbers. I didn't expect it to be. And look, they punted a lot of things they said, look, Investor Day is March 1st. We'll answer the question about Megapacks there. So I liked also that they reconfirmed that 50% production growth is still their long-term goal. They could have taken that number down. I like that they said Cybertruck is going to come this year, because even though they said, well, scale production won't come till next year, I think that's helpful. But I'm surprised the stock is up as much as it is, and we'll see what happens tomorrow morning.
Do you think that implies that sorry, Matt, no, please.
Oh, I was just going to ask on the Megapack side. I was actually modestly encouraged by the fact that the gross margin improved so much, and they went from roughly 100 million to roughly 200 million quarter over quarter in gross margin. Scaled up revenues a little bit and incremental improvements on gross margin percent. So to me, that was like exactly the kind of scale step change of like incremental profitability that I would have expected. So to me, that was a good sign.
Yeah, the gross margin on, to your point, on the energy side went from 9.3 to 12.1, and that was a good number. So it'll be interesting to see
on a higher revenue base.
On a higher revenue base. So this was negative 11.7 in first quarter, and now it's positive 12.1. So that to me, maybe that's another thing that was positive. But to your point, the deferred revenue recognition was a big number that inflated things. The EV credits were 467 million. That was a big number. The tax rate was only 6.9. So if you're trying to assess earnings quality, it was not great quality. They made the number, but they made it because of reg credits, low tax rate, and this deferred revenue recognition. And so going into the call, I was kind of like, well, stock's been beat up. All the bad news should be in the stock. But on the other hand, the numbers themselves were just, I call it mediocre. But their optimism about volumes, I think, is what is going to make the stock go up tomorrow. And I don't know if it'll be up 5%, but it'll be up probably.
Yash or Alexander, did you guys have anything you wanted to hit?
Yeah, I wanted to ask Gary, how did you like his teasing around new products coming and all that? Ban or energy products? Anything you got out of there, or we just have to wait for Investor Day? Or
I think you got to wait. I think he did tease, for lack of a better word, and when Elon teases, I've learned don't take him too literally, because he tends to overpromise. So I'm going to just kind of keep that one on the back burner and hear what happens on Investor Day. I mean, there could be some other things, but I've learned with him, don't get too carried away when he starts teasing. It's just not a good thing.
And that last question by Jonas, do you think he has some information and try to package it into a question, or was that just him playing smart?
What's your
his question was, when will you announce the $30,000 car on which you can make a profit? And then Elon said, well, you're just going to have to wait for that one.
Yeah. I wouldn't do that. I mean, to me, you're just going to cannibalize Model 3 if you announce it prematurely. I would wait till you're almost ready to launch it, and then, maybe a month or two before you announce it. But I don't see any good in launching it or announcing it now and have people not buy Model 3 because they're waiting for a smaller car, especially when you can't even see what it's going to look like. So I just think that would be dumb to announce that this early, because it doesn't sound like it's very. And look, Cybertruck should be what they focus on. Cybertruck has the potential to be like Model Y was in 2020. People were skeptical. I remember having fights with people on Twitter, mostly bears. People say, well, Model Y is just a big Model 3 and it's just going to cannibalize Model 3. And it wasn't, because it brought them into, the CUV segment, which is huge. That's a 40% segment of the business. Cybertruck is going into a 20% segment of the business. There's going to be no cannibalization. I think it has the potential, if they can execute, meaning get scale production on it, to be like Model Y. It's going to be there aren't that many EV pickup trucks out there with any production scale. So I think that's like the most important thing over the next year or two. And a $25,000 to $30,000 vehicle, look, when it comes, I'm sure it'll be good. But right now, I wouldn't get too excited about it because I don't think it's till 2025.
How did you interpret what they said about the Cybertruck? Is your estimate for 2023 still 50,000?
No, I'm using 10 now in my 2023 number. I don't know. I maybe it was a month ago I was at 50, but now I brought it down to 10. And I think, based on what I heard today, it sounds like they're going to try to get it out by the end of the year and scale it up in 2024. So I think keeping it at 10 is probably a good thing. Be conservative.
Yeah. Well, Gary, curious to get your thoughts on 4680.
Right.
Drew said, kind of punted the question around, okay, well, how do you look at scale? And then they talked about 2024 being like the first big year of like 4680 production, and then we heard about Panasonic and Tesla splitting the credits too, which I think was new information. But how do you look at the 4680? Because if you look at the bear thesis, that's the crux of it. It's this thing is not going to work without DBE and the dry battery electrode process, and without that, it's not going to work, and it's not going to scale up. But do you kind of get the sense from Drew that he kind of didn't want to front that question just yet? That's kind of the sense I got.
Well, they've been late, right? They were promising 4680 at the beginning of 2022, and it just didn't happen. So in order to get Cybertruck to really scale, you got to have 4680. And I just didn't get the sense they're willing to, stick their neck out on it yet. And maybe it was because they just missed last year, So I think that's why Drew was kind of, hedging a little bit. And, I'm always trying to lower expectations with Tesla. I just see Elon, push expectations too high, and then there's a problem. And maybe, and Zach's the opposite. Zach tries to bring everybody in, and that's always my goal. And to me, 4680, they've missed, and for whatever reason, they have not been able to scale it up. I'm hopeful they get it right this year, but I think Drew was right in just kind of, hedging a little bit. That's my view.
Yeah,
agreed.
I want to ask your questions. Just last one. When you say you found the numbers mediocre, does that mean for you they were just as expected, or did you really find them below expectations?
Look, the stock was down 55% in the fourth quarter. NASDAQ was flat. As everybody brought down numbers have been coming down since October 1st. So, and then they started a price war, right? So I think the numbers are already pretty low. So look, you buy growth stocks when the numbers stop falling, and that's where I think we're at. I think the numbers have stopped falling. They're at about 450 for 2023. I'll probably bring my numbers down to about 480 or so. And so I was, I guess, expecting fourth quarter, the gross margins to not be hit so much by the promotion. So the very first number I saw when I started digging through it was gross margin was 24.3. The street was at 26.3. And the second number I saw was the $1.19, and I started backing stuff out and said, okay, if I didn't have this 324 million of FSD recognition, and as Matt knows, normally in a quarter that might be 50 to 75. So I started backing out. That's like 8 or 9 cents a share. Then I saw the tax rate at 6.9%. The street was at 12. So when you back all those three things out, the real earnings number was below the street's $1.10. And so, and look, you got two things going on. You got, and this is before the conference call, you got the street really having cut estimates by a lot, and me expecting, okay, all the bad news is now in the stock. But the second thing is they missed the number. If they didn't have that big revenue recognition number, which you have to back that out, if they didn't have the low tax rate and they didn't have the high reg credit. So, to me, from a quality of earnings standpoint, the number was, good 10 cents less than what I was expecting it to be. Now, do people care? Its stock is so cheap at, let's call it 32 times earnings. Maybe people say, you know what, doesn't matter. And as long as they can deliver on the volumes in 2023, stock will go up. I mean, this stock has always been a volume stock more than a gross margin stock. So I guess to answer your question, I was disappointed that the earnings number was light, and that's kind of what I tweeted out. But then once the conference call started and you realized that they were pretty optimistic about volume, You notice in the conference call, the stock didn't start moving up until Elon started talking about January orders being twice what production was. And that's when the stock really started moving. So to me, that was like, okay, that's really good, because nobody was expecting that type of response to the price cuts. And he hedged a little. He said, that may change, that may slow down. But that's why I think the stock is up. So I'll be interested to see what happens tomorrow morning. I think it'll be interesting to see what the street publishes overnight. And you'll have the bears, find all the negative stuff, and the bulls will find the positive stuff, and it'll be this tug of war tomorrow morning. But I do think that the volumes are too low right now for 2023. The street's at 185, and what you had Elon do was set the bar at 1.8, but then he said, well, it could be as high as 2 million, which I don't know why he did that. I mean, I would have just let the bar stay at 1.8,
Yeah.
Anything else before we wrap up the notes? So Gary, we're just going through the notes we took for the call. If anything that jumps out, I don't know how much time you have, but I'm guessing we're probably going to be on for another 10 minutes or so. We're almost done with the notes. But
who did the notes?
I did. I just did them through the.
Oh wow, you're quick. You're pretty efficient.
Oh, and you missed Ross. Ross has COVID. So he was here for a while, but then he had to leave because he was going on CNN. You see, from us to CNN.
Wow, very good for us.
Farzad, I actually have to drop off now, unfortunately. I got some kids going to bed, so thanks for hosting this. This was great.
Terrible excuse.
Terrible excuse. Yeah.
Choosing your kids over this.
Enjoy the kids.
Screaming in the background for a good chunk of this, so sorry I was gone for a bit.
It's all good, brother. Thank you very much for joining us, Matt.
Take care, y'all.
Thank you. Wind turbines. Full self-driving today versus a year ago. Oh, Yashu won as well. Okay. All right. Bye, Yash. Just the two of us, just the three of us. We'll do it. FSD today versus a year ago. Progress has been amazing. How much is this impacting the take rate of FSD? Are people more excited? The trend is very strong towards the use of FSD. With each improvement, the enthusiasm increases. A lot of people still don't appreciate that Tesla is just as much a software company as a hardware company, world-leading AI company, kind of a big deal. Dojo operational later this year in 2023. Seeing a lot of world-class AI talent joining the company. Long-term potential for Optimus is big, I think is what they said. As getting closer to solving real-world AI, value will go up, which is good for market cap. Anything there that y'all took away from the call?
I would like to see take rate actually go up, because Elon's been predicting it for a while, and a lot of the bull sell side people have been saying, as we get closer to having a full launch of FSD beta, you'll see, because then people can buy it and they can actually use it. I'm still skeptical because it's $15,000. And so until it can drive itself, I struggle with the take rate's going to suddenly miraculously go to 20%. So I'm keeping my take rate right down at about 10%. And that's how I model it. So I would love to see the take rate go up, but it just hasn't done so. It keeps, dropping.
Yeah. Alexandra?
Yeah, and I mean, we still have no numbers on whether they're really monthly subscriptions or not. We just have to wait, I guess, until we have a better grip on that, because I mean, that's what he's been saying now for years, and we understand that, and I'm pleased this is still in place, but there's no numbers really supporting that the monthly subscription model has improved.
Yeah, I'm not, until the car can literally drive itself and not be a driver assist product, be like a true full self-driving product, I would not count on, that take rate jumping up into the 20s or 30s or 40s. I know that's what Tesla believes, and I know Elon believes that, but we haven't seen that. And look, FSD is, getting much better. Everybody says that, but I just would not want to be that aggressive at modeling, that type of take rate. That's a big number.
And we had a discussion earlier on hardware 3 and hardware 4. And I wasn't actually thinking of that earlier, but Farzad and Yashu and Matt were very good on that, saying the fact that they don't upgrade hardware 3 could be a sign that everything that's hardware 3, meaning everything that's in the roads now, will never become a robotaxi. That robotaxi is really on that new hardware that is so much different that it's not worth upgrading hardware 3. And that's obviously a new element, because that's something that was never out there spoken, that there would be now such an upgrade that the current versions will be limited or could be limited at one point.
How much do you think that people are getting excited about Investor Day, that, he's talking about, new hardware. He's talking about, next generation. I mean, could the investor day, most of these times when they have a big event, they disappoint. Do you think it could actually be a big event, March 1st?
I do, and I think it's actually a bigger event than usual because it's not for the nerds that they want to recruit in AI or in battery or whatever, but this is for investors, right? So they're going to lay out the vision, the product vision, and for once I should be able to understand something, I hope. So because I mean, I listen to AI Day, but it goes right over my head. I'm impressed, but by my non-knowledge. So in Investor Day, I really hope I understand it because we'll see the production line, we'll see the vision of the products that they want to roll out. We're going to talk capital allocation. That's my language. So I hope that we will get their stuff that is tangible for a larger group than just the engineers.
We all going to get golden tickets?
Try to get one.
We're still crying for them, right? We'll all try.
I think the fact that Elon has been sort of not harping on it, but keeps pushing this new platform to Investor Day and keeps framing it around Investor Day, I think implies that there's going to be some sort of reveal that says, hey, this is what we're actually working on. This is what it's going to be able to do. But I'm not so sure they're actually going to announce the actual vehicle. What they'll say is this is what the platform is going to look like. This is the kind of cost savings we're going to be able to get. Our plan is to start in these markets first. And then I think to the point you brought up earlier, Gary, I think if they do unveil a compact car now and it's slated to come out late 2024 or sometime in 2024, I think that kills Model 3. I think they stop selling Model 3 entirely. Model Y will be fine, but that's how I think about it.
Look, I think this new, we'll call it subcompact, is going to be very different looking than Model 3. So I think of a smart car where it's, like a hatchback and it's just real tiny. It might literally hold two people. And then, you might be able to put two little kids in the back if you're lucky, but, adults can't sit there. I think it has to be very differentiated from the Model 3. Otherwise you're going to have people who would normally order a Model 3. They'll say, hey, I could save 20 grand because the Model 3 starts at, let's say, 43. Go and buy this thing. And that's not good. So it's got to be very, very differentiated from a quality and size standpoint from the Model 3.
Yeah, I'm thinking like a Mini Cooper type sort of, small, still kind of roomy interior. You can put people in the back, but maybe luggage space is minimized, but maybe you maximize it through the front or something. I agree. I agree. I think
it's smaller than that.
A practical car.
You think it's smaller than that?
Practical.
Yeah. Mini Cooper is actually pretty decent size. I'm thinking more like a smart car. Really for Europe.
I'm curious if they actually go. Yeah. It'd be fascinating to see. If that's the case, then that platform is going to be tiny. That'll be a small platform if that's the case.
And not the van, right? That's a different platform than the van.
True. True.
Look, I'm most excited about Cybertruck because it's going to be higher priced. They have an $80,000 limit, from a IRA standpoint. I mean, they really can price it, starting probably where Model Y, maybe even a little higher than Model Y is. And I think, I hope from a margin standpoint, there's not a big ramp up because it's a new product type, right? It's, stainless steel. But I just think that could be so exciting if they could get that thing out there this year. And that would cause people to take estimates up with no margin hit because it's a higher mix type of vehicle than, say, the $25,000 vehicle is.
That's a great point. Let's do, let's finish up here. So Alex Potter, full self-driving unlock means higher revenue rate moving forward. What's the percentage of that, of what Tesla will be able to recognize up front? The upfront cost plus the incremental. The answer is released a portion of that minority of the total package that will be released over time. So refer to the deck. They had more numbers there, so they kept pushing Alex to go back to the deck. And then follow up.
Yeah, there's $1 billion left to recognize, which they always say that every quarter in the 10Q. So they just put it in the deck this time.
Yeah. Incremental capacity in Nevada for the 4680. There's a lot of battery. That's a lot of batteries, 100 gigawatt hours per year. Presumably, that's not all Tesla Semi. Is it correct to assume all those cells will be more or less usable anywhere? Where would you put it? The answer was too much guessing at this point, but you were right that not all 100 gigawatt hours will be going into the Semi. And then Elon alluding to future products using the 4680 which I'm thinking has to be the compact car, but there could be like a van or something in there that might be part of it. Any sort of comments there? Anything that's coming to mind?
Yeah, no, that was all good. That was actually a spoiled question I found. Usually Alex Potter is going more for more precise stuff.
Yeah.
Yeah.
George from Canaccord, adjusted prices, which may have put a lot of competitors in the back foot earlier this year. Capital markets are getting tighter. How do you see the competitive landscape? Who is your chief competitor for 5 years? And this was like a fascinating answer because they basically said there's zero competition anywhere. So 5 years is a long time. Tesla AP AI team asking, who do we think is the closest to a general solution for self-driving? So he framed it around the self-driving equation, not so much like from a pure car perspective. Can't see a second place with a telescope. Won't last forever. Could change in 5 years. Doesn't think it's any of the car companies that they're aware of. Whoever keeps up with the trend of EVs will be competitors. That somebody else, I think Drew answered that. Aside from Elon, we have a lot of respect for car companies in China. Chinese work the hardest and the smartest. Lots of respect. If there were to guess, it'll be some sort of Chinese company that will most likely be second to Tesla. And I put shots fired because I thought that was a fascinating little comment. Tesla China team is winning in China, able to attract the best talent in China. Super fired up about the future. Any thoughts about that specific commentary?
No.
I mean, he was very clever to pull it to FSD, right? Sorry, go ahead.
No, that is true. And I think he always brings FSD into it, and he needs to, because that's probably the weak link in the what most institutions think. They don't really put much value in, we'll call it robo-taxi. So he always does that, and that's good. I was laughing because Elon is the master at, just promising and, really getting everybody excited to close a conference call. So I liked it, but I always worry about the expectations now are too high going forward. So. Like, I'm worried about volume for first quarter. I hope people don't take volumes up to like 500. I know Farzad, you've talked about that. If they did 450, that's higher than where the street is. That's worth a lot if they do 450 instead of, I think the street's at like 428 or something like that.
I think you're right. And I think Troy's at like 430 or something, 435.
Yeah. I don't want a 500 type number out there. That's too high.
Yeah. Sorry, Alexandra, did you want to say something?
No, that's fine.
Sorry. Inflation Reduction Act has created huge incentives for commercial vehicles. Are there any plans to accelerate commercial vehicles outside of Tesla Semi? Basically saying yes, but won't give details. For the longest time, constraint on lithium-ion output. Counterproductive, adding complexity unless you get batteries solved. Will optimize product release based on where the batteries are available. Which was fast. And this is kind of like the van discussion a little bit.
Exactly. And I think that means also batteries are available in the US, because they said earlier they're going to onshore whatever they can for battery production. So I do believe that means the van production will be in the US.
Makes sense. Gary, anything there?
No.
Okay. William Stein from Truist Financial. I spelled it Stein, SCHS, whatever I spelled it. It was
Stein.
Guy said Stein. I thought he said, I guess I don't know how to spell it. Comment on progress around Dojo and Optimus. Anticipation for likely for the company likely disconnecting. I gotta fix the freaking grammar here. It's a disaster. The GPU cluster in favor of Dojo. There are big error bars with any predictions. We think Dojo will be competitive with NVIDIA's H1 by the end of 2023, surpassing it in 2024. And what's the strategy cost, energy cost required to train a frame of video? Said it already on AI Day 2, but they see an order of magnitude improvement related to what the GPUs can do. It's specialized for AI training, like a giant ASIC. More AI Day 2 info. He just kind of rehashed a lot of the information. It has the potential for products that aren't even in automotive, which was a pretty fascinating comment. Anything there? Any thought process? No. And then 1.8 million units was the follow-up. 1.8 million units this year is supply limited. Again, not demand was the question. If you were to become demand limited, what would be the propensity to use price and relatively high industry margins to grow units and share? Answer was 1.8 million is not really cell supply limited. Cell supply is roughly matched with current demand. Rest will go into stationary storage, Powerwall, and Megapack, which was kind of a continuation of what was being said earlier in the call. Anything there from y'all?
No, I just think it's interesting that they keep saying that they're capacity constrained, where the rest of the world worries more about the demand side of it. It's just interesting that they just see the world differently.
Yeah. I feel like they just, it's just, they really view it from the span. In their head, I feel like they know that if they get the price low enough, people will buy.
That's
they're
fair.
convinced that.
And that's fair. That's fair. It's just,
yeah,
you got to make money for as a firm. And look, you could bring Model Y down to 30,000 and sell every single vehicle, but that isn't going to make sense. So I get their point. I get their point.
And then last question from Adam Jonas. Is it time for Tesla to expand the captive financing? And then Zach answered this. Using it to plug the gaps from third-party products like leasing and loaning. Using captives to support vehicle sales, make sure customers have access, but do think there's an opportunity to grow it. It's a consumer of cash, so being cautious, but plumbing is in place to do a lot more. We'll see how it unfolds through the year. If they see a severe recession, cash is king. Want to be cautious for using cash on loans for cars, but still in a very strong position to get through a recession. Over $20 billion in cash. The $20 billion is earning quite a good amount of interest. S&P rated returns is 6%, and so the Fed should be very cautious that it doesn't exceed 6% when they're thinking about increasing rates. If we see deflation, Elon thinks we are, then we add the deflation to the risk-free rate from the Fed, which could exceed the long-term return of the S&P 500, which makes investing in stocks questionable due to cash being so good at returning. Any questions? Any sort of?
No, I mean, I obviously love
spaces,
this.
Right?
Yeah. I love this, and I just want to have Gary's input on the revolving credit line that they're now set up with Citi for 5 plus 2 billion. What did you think about that?
I didn't think much of it. I just hate when Elon goes down this path of
Fedway.
He's not accurate. People don't think of the risk-free rate as the Treasury bill rate. They think of the Treasury bond rate. So when he starts going down this path, I just think that's not the way any investor I know thinks about the world. But it plays into his narrative because that's what's gone up so much is the short-term rates, but long-term rates really have not gone up much. So I just get annoyed when he goes down this path and starts, yelling about the Fed. And I listen to lots of companies and nobody else. Look, we all hate what the Fed's doing, but don't blame your business on the Fed. That's just not right. So I don't know.
But did you feel that on that question that Jonas asked, they are going to start opening financing to their clients rather than just giving it to third party?
They might. I was interested in how do you think about that versus say buybacks or something? And it just sounded like, well, we have to conserve our cash because we're going to go into a recession and the Fed is doing the wrong thing and we don't know how deep the recession is. So it just felt to me like they really didn't want to answer the question, and I would not go down that path. I would rather they buy back stock than, expand credit to their customers. That's me.
There we go. Yeah. There we go. And then the last question of Jonas, you want to get into that one, even though it was only rhetorical?
Yeah. Sure. Here we go. March 1st, how close are we to the close? How close are we to the step change improvement where Tesla can sell an EV under $30,000 and they can sell it at a profit? I don't want to steal the thunder. And Elon said, if I were you, I'd be asking the same question.
Good question, but you shouldn't answer it.
But we'd be jumping the gun in future announcements, which implies that they have this figured out. They just need to sort of show the world. So, yeah. Thoughts there?
Well, he wanted to steal the thunder. He did it.
Well, again, you don't want to announce it because you don't want to cannibalize Model 3. So I think it's the right answer. We don't want to steal the thunder. And I hope on March 1st, that's not like the star of the show. Some 25,000, unless they're ready to launch it this year, which I don't get that sense. You guys?
Yeah. No way.
No. Given how slow it goes on the Cybertruck, I would be highly surprised that somehow now a ramp of a small car would already be ready. I couldn't imagine where. Berlin took much longer than we thought. Austin is getting there now. I don't see a production line, but I do believe that they are going to announce multiple other gigafactories in the next couple of months, and maybe even one beginning of March. Yeah,
that would be great. Yeah. What do you guys think happens tomorrow if people on the street? So street estimates keep coming down. So because they didn't really, other than the volume, they said, well, 1.8, and then Elon says, well, it could be as high as 2. They didn't really encourage that people should take their volume numbers up, but they did, to me, make it sound like, they're going to stay with this lower price strategy. They're not going to aggressively raise price. I mean, he did talk about how they raised Model Y by $500. So I guess the question is, if the street takes their numbers down tomorrow again, do you think the stock can still go up? Because I think that could happen.
Because it's so low. I think there was so much, negative news in the stock. This is probably for most people a reassuring call. I mean, you listen to it with a more negative lens than I do, but I think most people were actually, oh, it's not that bad. And the one thing people will retain is every day they can produce 5,000 cars, yet there are 10,000 people ordering a car, right? And if you just think of that, I mean, we don't know how long that's going to last, but for the immediate future, that's probably much better than most people anticipated.
Yeah. I mean, the way I look at it is they still they think, Zach said this on the call, that they're still going to be above 20% margins and above 47,000 ASPs. And to your point, they're going to be releasing the Cybertruck later this year. So for 2024, you're going to have a car that should be additive to margins plus growth in energy, which we talked about as, the best way to think about Tesla is from an operating margin perspective, not necessarily the car business. So I think that they're sending a lot of nuggets that say, hey guys, like, this is still a growth story, but it's also going to be making a giant amount of money, and our car margins shouldn't go below 20%. So model accordingly. Yeah. And we will figure out how to get the cars out there at the lowest cost possible with the EV credits, both on the consumer side and the production side, so that as many people as humanly possible can buy Teslas, and we'll still give you guys great returns as a business. That's the message I got from this call, like overall. Yeah. And so if that causes the stock price to go up, great.
Yeah, that's good enough.
But I think within the context of the rest of the auto business, it's like insane. I mean, that's kind of where my head is. I was like, there's no other automaker in the world that's going to be able to say this. The messaging is going to be very different.
Yeah, no, that's true. That's true.
So,
okay, well, we'll see tomorrow.
Okay.
4 hours in.
We'll see what happens tomorrow.
My gosh.
4 hours and 15 minutes.
I don't know how you do it.
God bless you guys.
My legs are tired.
I can imagine.
Yeah. Thank you guys so much. Thank you, everybody tuning in.
See you guys.
Yeah. Thank you all very much.
Bye-bye.
Everybody. Love you guys. Bye-bye. It's just me now.